The crowding into those mega cap names has led to crowding out of many other high-quality blue-chip names.
Balanced portfolios make a lot of sense heading into 2026.
It could be in an environment where we're still able to carve out new highs.
Earnings are going to be what drives stock prices.
We want to make sure we're managing risk well next year.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning and welcome to Bloomberg Surveillance. I'm Annmarie Hordern alongside Scarlett Fu this morning. Jonathan is still on paternity leave and Lisa is off. Of course, it's a quiet morning on Wall Street, but not so quiet in the world of geopolitics. Last night, the United States launched a military strike in Nigeria against ISIS targets. The administration is still in pursuit of a Venezuelan-linked oil tanker. And Scarlett, Ukrainian President Volodymyr Zelensky overnight says he plans to meet Trump, quote, in the coming days.
Yeah, he spoke on the phone for almost an hour with Steve Witkoff and Jared Kushner. We hear that Zelensky is expected to travel to Florida as early as this Sunday. And he made the point that a lot can be decided before the new year.
That's the line I also was looking at in this tweet. It was very short for him, saying there's going to be a meeting at the highest levels and a lot could be decided before the new year. Well, the new year is next year. Potentially, as we see a lot of geopolitical flare-ups right now around the world, potentially is this one spot where the Trump administration can get a deal over the finish line.
Yeah, we'll see how it goes. I mean, we know that at issue is the 20-point peace plan that they need to present to Russia, including that provision of strong security guarantees that's modeled on the Article 5 in NATO, and of course, whatever post-war development program they have planned for Ukraine.
It feels like, once again, though, missing from this conversation is Europe. So that is going to be incredibly interesting as these talks continue to take shape. Let's take a look at where markets are trading this morning. We are unchanged on the S&P 500 futures. Markets are back up and trading today following the Christmas holiday. We did have another record high, though. We were in the middle of that Santa Claus rally. We had another record high on Wednesday before the markets shut. It would be the 39th. It was the 39th record high of the year. Potentially today we'll go for the 40th. 10-year Treasury yield, we are up almost 2 basis points, 4.15%. Once again, commodities is where all the action is. Silver, at one point, Scarlett, passing $7,500.
Yeah, that's right. Year to date, silver has gained 150%, the best year since 1979. And you also see this rally in precious metals and industrial metals because of the weak U.S. dollar. The Bloomberg Dollar Index down about 8.3% for 2025, and people are projecting more weakness in 2026.
And that's just going to help things like gold and all these other precious metals. Coming up in the program, we'll talk about a lot of this with George Goncalves of MUFG with stocks at record highs, Ed Mills of Raymond James as Ukraine signals progress on peace talks, and Nadia Martin-Wiggin of Svedlin Capital with geopolitical tension sending oil for its biggest weekly gain in months. We begin this hour with stocks pulling back just ever so slightly after notching fresh records highs as the Santa Claus rally really sets in. George Goncalves of MUFG looking ahead to 2026, writing, quote, a growth set of risks that will require careful navigation, particularly around concentrated risk market valuations and weak labor markets. George joins us now. George, thank you so much for joining us. So you don't sound so merry this morning when you look ahead to 2026. What are potentially how you're looking at in terms of risk and rewards? George, I think actually we don't have your mic at the moment. There you are. Let's start that again, George. I missed everything you said. You didn't sound so merry there in parts of your note as you look ahead to the risks of 2026. Walk us through your thinking.
Yeah, look, 2025 obviously was a year full of disruptions, ended with markets near the highs as you're describing it, volatility declining. All of that, seems like, it could continue, but those sort of setups are the ones that are the most precarious, given the sort of backdrop. You talked about the geopolitical at the beginning. We are really have been focused on the labor market, and we need to have this economy broaden out and not just be really concentrated both in income distribution, but also in the tech sector. We need a broadening out of the economy to really change our view.
Do you think we will see a broadening out? And if so, how do you time this?
Yeah, it's like some of the key kind of indicators to watch out for is, will small businesses really start to pick up the hiring pace? Is that something that we can kind of keep a real-time assessment as we go through the course of the beginning of the year? We are concerned about a potential head fake. At the beginning of the year, probably we'll see benefits from the fiscal policy that was put in place with the big, beautiful bill. But then will that be sustainable into the second half of the year? That's really the big question.
Yeah, I've seen several notes, including yours, George, mentioning the World Cup as a catalyst for first half growth, GDP in particular. That would certainly help specific hosting cities, but how meaningful would that impact be in aggregate?
Look, it's hard to kind of quantify specifically, but look, next year you have the hallmarks of a potentially pretty exciting year. You have the World Cup, you have the U.S.'s 250th anniversary. I'm sure that between up until at least 4th of July, I think that it's going to be kind of a buoyant sort of spending pattern amongst U.S. consumers. The question is, is it concentrated? Will it kind of even out over the year? And I think those are the big questions to kind of think about.
You also have the midterm elections, and we know that midterm election years tend to be high growth years. As with everything else, investors do tend to price in the benefits before they actually filter through the economy. Where is this going to be most apparent? Is it going to be in equities, in treasuries, in the dollar, in commodities?
Yeah, look, this is interesting because a lot of these sort of views, I think, are largely priced in, to your point. The dollar was weak this year, but most of the weakness came at the beginning of the year, and we've been basically going sideways. The movement in precious metals has been off the charts. Stocks, continue to grind higher. Now, if a lot of that was capturing the news of both the Fed pivoting towards more easier policy, a lot of that's kind of baked in the cake. And so the question is, what's the follow through? I think that it's going to be hard to meet some of these expectations. Last
time you were on, it was in early November. You were on with John and Lisa, and you were talking about the market internally starting to look exhausted and ripe, at least for correction. But here we are, December 26th, and we had on Wednesday before Christmas a 39th record high when it comes to equities. Do you think we could see a meaningful recalibration in equities in 2026?
Look, in between, nothing's linear. We did have a minor correction or a minor pullback, I should say, in November before Thanksgiving. And then since then, it's been off to the races. Very typical of the end of the year type rally. Also very typical of a low vol environment. We have had, the VIX very low, rate volatility declining. All of this has kind of engendered further risk taking. We do think that, there's going to be a meaningful correction at some point over the course of 2026.
When it comes to how you're thinking about the Federal Reserve, you say a lot of this is baked in. When you say baked in, do you mean one more rate cut or two more rate cuts?
Look, so the market has about 1.5 to 2 cuts basically in the back of their mind, priced in into the forward curve. It's actually visible. We think it's all about the sequencing. It depends on what takes place, who's pulling the actual rate cuts forward. Is going to be under Chair Powell's kind of last few meetings. We think maybe one more cut under the current sort of Fed. And then in the future, we don't know. I know there's been a lot of questions about Fed independence and will the Fed cut for the right reasons or for other motives. Either way, we think that the Fed's going to probably cut further than what's priced into the market. But if they cut for more than 2 times, I think something has changed in the macro sense. So if the Fed's cutting more than twice next year, something's kind of weakened in the economy that justifies it.
Yeah, your view is that the Fed will cut rates 3 to 4 times in 2026. And of course, it is expectations of lower rates that's helping to support those commodity prices, gold and silver prices in particular. What is different, George, about gold's run this time versus, say, in October when it peaked at about 43.81? And a lot of people saw that run up as overheated.
Look, I think the whole year precious metal move is something that is very telling of there's a view around the commodity needs for sort of the new technology and the new economy that's evolving. But I think it's also a referendum on sort of Fed policy. The Fed did go from basically not wanting to cut, pivoting towards cutting, stopping QT, and then introducing a version of not QE but reserve management, which is going to add a lot of liquidity into the banking system. So I think the precious metals definitely picked up on that way earlier than other markets.
Yeah, you could also argue the precious metals are part of that debasement trade, too, where people are straying away from the dollar and treasuries and moving to precious metals and indeed Bitcoin as well, although we haven't seen crypto really participate in this leg of the rise in gold and silver. How do you fit Bitcoin and what's happening in that speculative part of the market into your overall thinking?
Look, so obviously I look at crypto or these sort of alternative assets more from the lens of the macro, what it's telling us about liquidity more in general, and the preferences amongst liquidity. The fact that it's going into kind of harder, more of the older sort of precious metals versus the new age version of digital gold, I think it's telling you something, that there's a preference to more safety versus, what is still proven, unproven sort of technology of how long it's going to last and what's the true valuation of Bitcoin. It's not something that's in my wheelhouse, but in general, it's telling you from a macro sense that there's a preference for kind of the more traditional forms of alternative assets.
We've seen the entire commodity space, though, lift higher. Copper has been on an absolute tear as well. When it comes to the concerns in the commodity space, the physical commodities that are used across supply chains like silver and copper, there's some concern that potentially we'll get more tariffs in 2026. How are you thinking about trade policy, given there's some key dates coming up when it comes to this administration and some of the trade policies they've enacted in 2025?
Obviously we're still waiting on a number of sort of key information, but we do know that tariffs obviously are a key sort of platform agenda item that's not going to go away. So there's a baseline of expectations around tariffs, and then the question is, do we get more sectorial tariffs, as you're alluding to? We do think that this full impact of tariffs is not just an inflationary sort of phenomenon, and maybe it's run its course there. We don't know. But I think it's more about the sort of impacts and indecision that it does on planning, especially around the sort of input items like commodities. So I do think that trade policy will have an impact on that side of things as well.
Does it complicate potentially corporations and whether or not they are going to and when they may pass on more of these costs to consumers?
Well, look, I think that what we've noticed thus far is just a sort of hesitancy to kind of pass through fully the tariff effect, and profit margins have been kind of absorbing some of that. I think there will come a time, and I think we're getting close to that point, where companies will not be as generous in absorbing these sort of profit costs, and they're going to try to pass it on to the consumers. Now, if it's towards the industrial sort of mid-production, business to business sort of inputs that they're assessing and seeing if they can negotiate with their partners, maybe they can pass on some of it. But if it's to the U.S. consumer outright, I think that they're going to have a challenge to do so, and it's going to eventually have to hit their margins.
George, thanks so much for joining us this morning. Hope you had a lovely Christmas. George Goncalves of MUFG. So, since he mentioned World Cup, or you mentioned World Cup to him, I was totally distracted on StubHub and Ticketmaster, because I've been tracking these tickets, and still, to see the final could cost you anywhere between $12,000 to $90,000.
Depending on who plays. Yeah.
A ticket. Who's buying these, please? So you got me a little depressed this morning, because I thought maybe at some point I'd be able to go for the final match.
You have to have already, put a bid in for that at this point.
Yeah, definitely. All right, let's get you an update on stories we're watching elsewhere this morning. Here's your Bloomberg Brief with Yahira Anand. Hey, Yahira.
Hi, Annmarie. The U.S. launched a military airstrike against ISIS targets in Nigeria. President Donald Trump saying he ordered the precision hits at the request of the Nigerian government, which has been struggling to contain increasing levels of terrorist attacks in parts of the country. Defense Secretary Pete Hegseth warning more strikes are coming if the group continues to target innocent civilians. Meanwhile, holiday travel is hitting a major wall with a winter storm expected to descend on the tri-state area. Over 400 flights have already been canceled at JFK, LaGuardia, and Newark. Forecasters are expecting up to 8 inches of snow from Friday afternoon through Saturday, and New York City is issuing a travel advisory for the duration of the storm. And Tesla facing renewed scrutiny over its door handles. The National Highway Traffic Safety Administration said it's evaluating claims that the mechanical door release is, quote, hidden, unlabeled, and not intuitive to locate during an emergency. The move expanding the federal examination of Tesla's doors following an investigation by Bloomberg. That's your Bloomberg Brief. Annmarie?
My problem is sometimes I just can't find the door handles. All right, that's for another conversation. Up next, Ukrainian President Zelensky saying he will meet with President Trump soon as Kyiv and Washington look to align on a peace plan. Ed Mills of Raymond James joins us next for that conversation, a whole lot more. You're watching Bloomberg Surveillance. Good morning. Welcome to Bloomberg Surveillance. It is the day after Christmas. Hope you had a lovely holiday, however you were celebrating, preparing from the tri-state area for potentially up to 8 inches of snow. Where we are trading this morning is obviously very thin volumes. We did have, though, another record high in the S&P 500 on Wednesday. In the shortened trading day, S&P 500 futures are unchanged this morning. 39th record high we had on Wednesday. 10-year yield up about 2 basis points, 4.14%. Silver, oil, gold, copper, the entire commodity complex has been moving higher. Silver, $74. At one point, it passed $75. Scarlett and I have been talking about this the entire week. There's geopolitics at play, there's central banks buying, and also there's just the fact that things like silver and copper are actually used in the physical world.
Yeah, absolutely. So there's a lot of demand. There's a question about supply, especially when it comes to copper with some outages across mines. But in addition, you've got the weak dollar. And so when you have a weak dollar, the knee-jerk reaction is higher commodity prices. And we've seen the U.S. dollar, at least as measured by the Bloomberg Dollar Index, down about 8% this year.
Yeah, absolutely. It's been on a downward trend and potentially going to go lower next year. Under surveillance this morning, Ukrainian President Volodymyr Zelensky saying he plans to meet with Trump in the coming days. Zelensky signaling a lot could be decided before the new year after a Christmas Day sit-down with U.S. envoys Steve Witkoff and Jared Kushner. Ed Mills of Raymond James joins us now. So, Ed, you do have Zelensky looking like he's going to be going over to Florida, Mar-a-Lago, where the president will be for the remainder of the Christmas, New Year holiday. Do you think potentially we could get a deal before 2026?
Annmarie, it's possible. I think that there is probably more to work out on the Russian side. I think Zelensky is trying to find what he can get with the American contingent here, because I think he wants to put pressure on Putin. Right now, the 20-point plan that Zelensky and the Americans have agreed to is probably unacceptable to Putin. This here is trying to reverse some of the pressure that has come onto him in the recent months, especially that kind of pre-Thanksgiving deadline that the Trump administration had put on him. So I'd say there's going to be progress, but I don't think people are really expecting that what Zelensky and Trump work out will be acceptable to Putin, at least in the near term. We probably need at least one more round of this before things get settled.
Well, as you were speaking, Dmitry Peskov is speaking right now, and he's saying Russia has analyzed the information on the peace plans, according to the TASS news agency. You have Yuri Ushakov. They're saying that contacted U.S. representatives. He's been one of the main negotiators, senior Russian diplomat at the table. And the Kremlin saying it has contacted the U.S. on Ukraine peace plan. Do you think Putin is just playing for time, or do you think they are serious about getting to an agreement?
I think that they are open to an agreement. I think that they are really going to be looking at these territorial concessions. And I think this is really what it comes down to, Annmarie, because what is the future of the Donbass region? How much does Ukraine have to fully kind of acknowledge that Russia has kind of certain parts of this territory? How much of it is a demilitarized zone? How much does Ukraine get to control this? How much does Russia get to control this? I think that's the critical issue. The second issue is, even if you kind of create a demilitarized zone, what are the security guarantees? I think that Zelensky and Ukraine are willing to give up more of that territory, at least as a demilitarized zone, if they get those kind of security guarantees. But if there's not the security guarantees, they're not willing to do that. And I do think that Putin is not going to be okay with the security guarantees that Zelensky wants, and are probably not going to be okay with the demilitarized zone. They want more territorial concessions, I think, than what the U.S. and Ukraine are willing to give at this point.
So these are all pretty familiar sticking points, things that have really locked both sides into their respective positions for months now. Ed, what about Europe? Annmarie was mentioning earlier, Europe is kind of missing in all of this. And if Zelensky goes to Mar-a-Lago on Sunday, does Europe play any role in this?
They could. I think what we've seen, Scarlett, is that Europe has played a bit of a backstop to these negotiations if they seem as if they are going too far towards Russia, if they are seen as going kind of too aggressive towards Ukraine. There are kind of key constituencies within Europe that step up. I do think what we're going to see, if we do have a demilitarized zone, how much do NATO or European forces? I would lean more towards European forces, so it's not seen as a specific NATO operation, could be part of that security guarantee in that area. But they just want to make sure that Ukraine is not on the wrong end of any of these negotiations. So they stay out for now, but if it goes in the wrong direction, they step step up that diplomatic pressure on the U.S. envoy.
Okay, and of course, we are anticipating a visit between Zelensky and Trump in the coming days, according to Volodymyr Zelensky. I also want to get your take on what happened over the holiday, which is the U.S. launching Christmas Day military strikes in Nigeria against some ISIS targets. And of course, we had known that in November, the president threatened possible military action if the government did not halt the killing of Christians. Talk a little bit about why now and whether this is a one-time action or this is the start of something more sustained.
Yeah, so President Trump has said this is at the request of the government. He does view kind of the defeat of ISIS during his first term as his signature geopolitical kind of military achievement of that first term. To the extent that he is going to have requests and it is against ISIS, I don't think that there's anything that he would hold back trying to go after that group. So I do think at this point, I think you would consider this as contained. But if there are other needs, he's absolutely willing to do this. It is unusual to have strikes under the Trump administration. He so far has been fairly limited in how aggressive he wants to be with some of that proactive military use. So that was keep me more in that contained camp versus this is the start of something new.
Well, at the same time, Ed, he did promise on the campaign trail to not entangle the United States in any more foreign conflicts. Is this going to be a problem with his base when it comes to the midterm elections?
I think as long as it's specific, it's targeted. I think it is kind of couched in we cannot let ISIS kind of reconstitute or kind of get stronger in any sort of fashion, Annmarie. And also the fact that he would probably kind of couch this in the targeting of Christians, something that from a political perspective is in a pretty decent standing. That's why I did say that I think this is probably more contained than a start of something new. Something that he has done quite well with his base is trying to maintain that contained military conflict. And he has kind of ticked off more of the items that he has negotiated. Peace between kind of Israel and kind of the conflict in Gaza. Other kind of areas where he's working on with kind of Thailand, Cambodia. He has his whole list of things that he has stopped globally. So containment is the base case here, but he also always wants to project U.S. strength. And so he's not going to be shy if he's requested and it is needed.
What's going on with U.S. strength in Venezuela? It's been 6 days that the U.S. continuously is trying to pursue this sanctioned oil tanker that's linked to Venezuela. Do you see as the administration just trying to control the sanctioned oil, or do you think this is part of a bigger regime change?
Yeah, Annmarie, what I've told clients at Raymond James is this is part of a reestablishment by the Trump administration of the Monroe Doctrine. I do think that we are looking at kind of North and South America as America's sphere of influence. I also think this is a bit of a shot across the bow and a warning sign to Mexico. And to the extent that the drug cartels are the kind of underlying issue here, I think that this is a warning to Mexico, where he has already labeled the drug cartels in Mexico as terrorist organizations. If President Sheinbaum does not get that under control, he's willing to take additional action. I think the big debate that I've had with clients at Raymond James is that to the extent that we are reestablishing our sphere of influence, is that going to make it harder for us to push back as Putin wants that more territorial concern and what his former sphere of influence is? Is it going to be harder to push back against Xi if he gets more aggressive against Taiwan? So in the near term, that's a projection of strength by this administration, but it could have significant unintended consequences on the geopolitical stage.
Ed, as we wrap up our conversation here, you talked about your clients and the debates that you're having with them. What is the single most important geopolitical meeting you see in 2026 for the president that he needs to resolve?
Oh, 100% it's going to be Trump and Xi. This is the number one and number two economy in the world. The surprise for me in 2025 was how good we are with the relationship with China. If that continues, that's a very bullish signal for the stock market in 2026. If there's volatility, if that falls apart, that's a big warning sign. So tracking China, tracking Trump and Xi, probably from a Raymond James perspective, is the most important thing for 2026.
Ed, thanks so much. We look forward to continuing the conversation next year. That was Ed Mills of Raymond James. Under surveillance coming up next, behind the scenes at Nike. Good morning. Welcome to Bloomberg Surveillance. I'm Annmarie Hordern alongside Scarlett Fu this morning. Jonathan Ferro is still on paternity leave and Lisa Abramowicz is off this week, but she'll be back with you next week. And then the whole gang will be back together for the new year in 2026. We're 3 hours away from the cash open. Let's take a look at what stocks are trading in the futures market this morning. Relatively flat and unchanged. Nothing's really going on, Scarlett. We are in the midst of the Santa Claus rally. We had a 39 record high on Wednesday. Potentially today we're going to go for 40th. But this is that lull in financial markets that happen right now between Christmas and New Year's. Everyone kind of goes home. They recalibrate. Lots more action happening in the geopolitical space, which is moving commodities. And then the VIX. You wanted to talk about this.
I wanted to talk about the VIX because even as we see the Santa Claus rally in effect right now with a 5-day winning streak for the S&P Dow and NASDAQ, the VIX actually ended Christmas Eve below 13.5. That is the lowest point of this year. But you look at how it's performed over the past 3 months, it averaged just below 18. And of course, the high point for the VIX, that is, was about 52 on April 8th in the aftermath of the Liberation Day tariff announcement and then the pulling back of that.
I have thought of the whole year as pre-Liberation Day, post-Liberation Day. In my mind, when it comes to reporting on politics, I was with the president when he was coming back from Air Force One. He didn't like my question about the Trump put. And then a few days later, the bond market got a little bit yippy and reversed course. But how much financial markets quickly took Liberation Day as that was Bible. And then once Trump recalibrated, that was it. It was off to the races.
And then that idea of the taco trade, right? That the president will always recalibrate given how the bond market reacts. And if the bond market has a tantrum, then they're going to start pulling back on some of the things that they announce.
It's been one of the checks on his policies in terms of something he pays attention to. The first term, many said, is the stock market. That's what Jonathan always said. Second term, it looks like he's paying more attention to treasuries.
The 10-year yield in particular.
Yes, 10-year yield, which today isn't really doing that much. 3 hours away from the cash open. Let's get your morning movers with Yahira. Hey, Yahira.
Hi, Annmarie. The surge in precious metals is spilling over into mining stocks. We are seeing shares of Freeport-McMoRan up 3%, Southern Copper up 2.5% as gold, silver, and platinum all reach record highs on the same story, a weaker dollar and expectations for Fed rate cuts, as you've been saying all morning. Meanwhile, moving on to Micron, if we hold at these levels, Micron will open at a fresh record high. The stock is up 1.7% in the pre-market, but it comes after a roughly 230% run this year, fueled by strong demand for its memory chips used in everything from computers to AI servers. And we end on Biohaven. This stock is absolutely plunging in the pre-market, down nearly 14% now after one of their experimental drugs to treat depression failed to meet its goals in a mid-stage study. Analysts are saying that it's disappointing, but not all that surprising given the complexity in these types of clinical trials for depression. Even so, amid thin trading, we are seeing that amplified move, as we can see. Annmarie.
Thanks so much, Yahira. On our radar this morning, Ukraine's President Volodymyr Zelensky saying he plans to meet President Trump in the coming days to iron out details over a potential peace deal. Reports from Ukraine saying Zelensky is expected to travel to meet Trump in Florida as soon as Sunday. At the same time, Scarlett, we are getting some information from Interfax via the Kremlin, and they say at the direction of President Putin, contact took place between representatives of Russian and U.S. administrations, but I don't see Russia moving just yet towards really coming to the table for a trilateral deal.
And I think this is something you touched on in our conversation with Ed Mills of Raymond James, that there doesn't appear to be much urgency on the part of Russia. They can afford to take their time and be patient and wait out the clock, run out the clock, and see what happens. Of course, from Ukraine's side, there's a lot of urgency to get moving, which is why we see Zelensky talking about meeting up with President Trump in the coming days. But Russia can kind of sit back and wait to see how it all plays out before responding one step at a time.
This is something we'll be watching over the weekend and potentially a big story next week as we head into New Year's Eve. Elsewhere, U.S. forces striking Islamic State targets in Nigeria in collaboration with the country's government. U.S. Africa Command saying the strikes came at the request of Nigerian authorities and killed multiple terrorists, with Defense Secretary Pete Hegseth saying there could be, quote, more to come. And precious metals, as Scarlett and I have been talking about all week, really, continuing their surge after notching new all-time highs. Gold, silver, and platinum all jumping to new records on the heels of central bank purchases, U.S. dollar weakness, and this morning, really, the geopolitical tensions we've been discussing.
And I'm not sure that there's anything that will change that in the near term. Certainly the next couple of days, this will continue to be the theme.
And when it comes to gold, it's been up 100 70% this year.
Yeah.
Silver, 150%. The best year since 1979. And when you look at gold, people are talking about 5,000 next year. We're already at 4,500. So you have to think potentially some people are going to have to look at year-end 2026 and maybe actually increase that target.
There's going to be a lot of demand in the new year as well because you have Lunar New Year, and that's when gold tends to outperform as well. And then the wedding season in India also places a lot of demand for physical gold.
Very good point. As we shed the year of the snake and we go into the year of the horse.
Ooh, you're on top of that.
I'm looking forward to this in February. All right, turning to retail. Shares of Nike are down more than 20% this year. CEO Elliott Hill has been facing an uphill battle trying to turn around the company he previously retired from in 2020. Bloomberg's Romain Bostic takes us on a behind-the-scenes look at their turnaround plans.
In the heart of Western Oregon lies a 750,000 square foot plus complex. So secret, few are allowed past the lobby.
If you love sports and you love product, this is kind of Disneyland.
Hundreds of motion picture cameras surrounding an indoor soccer pitch. Speed sensors encircling an Olympic racetrack. Electronic pressure plates embedded in a basketball court. Biometric hookups to assess a runner's gait and posture. A hermetically sealed room that mimics the brutal heat and humidity of a Tokyo summer. All told, more than 800 pieces of testing equipment under the roof of the LeBron James Innovation Center, home to the Nike Sport Research Lab. An evolution from the company's experimental kitchen counter roots and a nod to its future of putting the athlete first.
This is our Nike Sports Research Lab in our Innovation Center, and this is the home to dreamers, creators, makers, engineers, some incredible teammates of ours who are all dreaming about serving elite athlete problems.
Yeah, what Nike as a brand is founded on, really at the core of our history and heritage, is listening to the voice of the athlete, right? Phil's point, we're in this amazing building where we have dreamers building the future and work with not only elite athletes, but the everyday athlete to take those insights and understanding and build not only for the elite, what you've seen being here today, but then are able to translate those innovations through every price point.
Amy Montaigne is the new president of the Nike brand. Phil McCartney is the new chief innovation, design, and product officer, overseeing ideas across the company's 3 units, Nike, Jordan, and Converse. They are 2 of the key players in CEO Elliott Hill's full court press to reinvigorate growth following former CEO John Donahoe's reign. Under Donahoe, it was a tenure that saw annual sales begin to drop in 2024 as demand waned for the brand's lifestyle sneakers like the Nike Dunks and as relationships with retail partners soured. Elliott Hill is now trying to plug the hole with a refocus on athletic performance.
We're going to obsess sports. I think that's been, since Elliott returned, that's been a key part of our charge as a leadership team. And we're already starting to see the fruits. You know, we spend a huge amount of time bringing athletes here. We text with Faith Kipyegon, Elliott Kipchoge, LeBron James. We bring them to our home and then we go to their homes. So the origination for ideas is always the athlete. That's at the core of everything we do. And then we start to think about how do we apply those insights broadly to the 8 billion people who we're trying to invite into sport every single day.
So when it does actually go to market, are you going to target it towards the athlete, or are you going to try to maybe just target it towards the casual wearer?
Everything that we do and the focus on performance is listening to the elite athlete and capturing that data and information to help lead this amazing innovation. So we will for sure be connecting this story exactly to our athletes, which or who helped give us those insights, who we tested with, and that will be how we determine how we tell that story going forward. So it's very much about the insights from the athletes, the data we captured, the innovation we're delivering, and helping communicate that to consumers all over the world.
The reason that we start with elite athletes is when we solve those discerning problems, those milliseconds, micro millimeters, we can create products that then translate down for athletes every day all over the world.
Speaking of the everyday athlete, I put on my running shoes and geared up for an afternoon under the microscope of some of Nike's best researchers for a head-to-toe consultation. I even got a glimpse into the retailer's future with Project Amplify, a footwear system with lightweight motors and rechargeable cuff batteries that aims to help you move faster with less effort. Nike's Chief Science Officer, Matt Nurse, providing some words of encouragement along the way.
So we have an expression, if you have a body, you're an athlete.
Yeah.
And a lot of what we learn from elite athletes does trickle down and help everybody, but a lot of what we learn from everyday athletes does trickle up. You know, there's plenty of opportunities where technology, we have to sort of burn the candle from both ends and figure out where the best opportunity is.
The ethos of the company, and particularly since Elliott has taken over, is put more a focus back on the athlete. I mean, what's the difference now between what you're doing in this building and say what Bowerman was doing, decades ago and, whatever shack he was working out of?
Honestly, today it's just a more modern, sophisticated incarnation of what Bill Bowerman was doing in his lab. This notion of having an idea on how you might improve an athlete performance or protection, actually building it, Bill Bowerman pouring into a waffle iron, modifying a shoe. That's what this building is designed to do, but allow more sports, more athletes, full speed, full motion, but we're solving the same problems, doing the same thing.
A little different this time around. Mounting pressure in the running space, under threat by competitors like On and Hoka. Do you worry at all about some of the recent upstarts that have come into this space, particularly on the performance side, Hoka, On Running, Norda, etc.?
We have 3 incredible brands here at the company. We have Converse, we have Jordan, and we have Nike. So I think a lot of the work that we're doing in this new multi-brand offense that we're in is making sure that we intentionally shape the 3 amazing brands that we have. That allows us to, at certain times, come together to go after an opportunity in the market, but also to be more specific about what each brand represents and the growth potential of each. I think when we think about that, I think it's fair to say that the distance between ourselves and our potential is a little bigger than the distance between ourselves and our competition.
And we look at innovation not just in product, like Phil's talked about, but how we tell our stories and how we deliver experiences in the marketplace for consumers. And when you think of some of maybe our latest, most innovative marketing concepts, I think back to the last Super Bowl, a male sport at a really important time around the world. And we told the story of So Win through our female athletes, right? We listened to their voice. We're deeply connected to where they were at that moment. And we're able to tell the story of the support of those athletes and what they are doing in the world of sport today. So I think that's one amazing example as we continue to innovate by listening to them where they are, where the world of sport is and sport culture, and then are able to deliver something like So Win.
I mean, I'll give you the last answer here, and this is really on what you want the Nike brand to be, beyond what it already is today.
What I believe and want for the Nike brand is for us to always remember our roots and to honor our founder, to really come in every single day obsessed with serving the athlete, listening to their needs, not only meeting their expectations, but taking them somewhere new. And when we do that, there is all the opportunity in the world for our future.
That was Romain Bostic taking us behind the scenes at Nike Sports Research Lab. Let's get you an update on stories elsewhere this morning. Yahira's back with your brief. Hey, Yahira.
Hi, Annmarie. The U.S. launched a military airstrike against ISIS targets in Nigeria. President Donald Trump saying he ordered the precision hits at the request of the Nigerian government, which has been struggling to contain increasing levels of terrorist attacks in parts of the country. Defense Secretary Pete Hegseth warning more strikes are coming if the group continues to target innocent civilians. Meanwhile, coastal communities in Southern California are bracing for more rain and flash floods, with a state of emergency still in place for Los Angeles and neighboring counties. The historic storm pummeled the region over the holiday, leading to road closures, flooded freeways, as you can see, and evacuations. According to the Los Angeles Times, at least 3 people have now died as a result of the storm. And Google rolling out a new feature allowing users to replace their existing Gmail addresses with a new one while retaining all their data and services. The updated guidance on email address changes only appears on the Hindi version of Google for now, but it says it will gradually roll it out to other users, to all users. That's your Bloomberg Brief, Annmarie.
Yahira, there are 2 types of people in this world. The people who just let everything start building up in their Gmails. Right now, I'm looking at mine. I have 180,485 emails. What person are you, Scarlett?
I tend to have a lot. I won't say that they're like in the triple digits necessarily, but I have a lot.
Well, I just don't open them and then I just don't delete them. I just let it all build up. I'm not reading, obviously, all of these. All right, up next, a historic rally for commodities.
We see commodities as a way to have an inflation hedge within portfolios, and they work really well when they work well, and they don't work so well a good portion of the time. I think the question is, how much can it continue?
Nadia Martin-Wiggin of Svedlin Capital joins us next. You're watching Bloomberg Surveillance. Under surveillance this morning, a historic rally for commodities.
We see commodities as a way to have an inflation hedge within portfolios, and they work really well when they work well, and they don't work so well a good portion of the time. So certainly we've been in an environment where that has been a very powerful uptrend for a lot of these commodities. I think the question is, how much can it continue?
Here's the latest. Gold and silver jumping to all-time highs as escalating geopolitical tensions boost the historic rally. Bloomberg's Tatiana Daria joins us now. Tatiana, let's end with the question we heard from Cameron Dawson earlier this week. I think the question is, how much can it continue? Can this rally continue?
Well, we have to ask ourselves if the macro conditions and sort of the catalysts that are playing into this rally will continue, and consensus think that they will. For example, the structural bid from central banks, that is expected to persist for years to come as they want to diversify away from dollar assets into gold. And if you look at geopolitical fractions, we keep seeing more of that, right? You have Venezuela, you keep an eye on that one because you cannot rule the risk of boots on the ground there. You see more militancy escalating now in Nigeria. So geopolitics is reviving that premium yet again. But beyond that, you also have concern about Fed independence going into next year. Let's not forget about the Supreme Court tariff decision, which could really upend bonds and rekindle that risk premium if fiscal concerns return, if the administration is forced to issue refunds. So a lot of the catalysts are in place. And if you look at the white metals, they've just recently been added to the critical minerals list, which opens the threat of tariffs going into next year. So these are sort of the big tailwinds that the market has. But of course, we cannot discount the risk of reacceleration in the economy with the Trump administration pushing that tax bill and those provisions kicking in into the next year.
And a reacceleration in the economy would be good news for the industrial metals like platinum, like silver, like copper as well. How are you thinking about the demand that's coming in from ETFs? Because that was a big driver, at least for gold.
Yeah, exactly. For gold, and now they've actually spiked for the rest. So what is being less appreciated or less talked about is that the ETF crowd has also piled in on this trade. And in gold's specific case, ETFs have actually bought more than central banks by some estimates. I only say that because we don't have full visibility into the central bank action. But if you look at the data that we have available, those ETF buyers have bought more than central banks, and they've returned to this market for the first time in the last 5 years. So if you look at the history, that's poised to continue. That's poised to offer another tailwind. But it also leaves this market at risk of just severe crashes when it all reverses, right? ETF buyers and just retail traders can get easily scared by an unwind in this trade. So if you play that trade, you have to be aware that there could be some outsized move on the downside, as we've already seen on Wednesday. I mean, palladium crashed more than 4 standard deviations. That will stress your risk management.
Tatiana, you're very busy, I imagine, heading into 2026. Thank you so much for joining us today. That was Bloomberg's Tatiana Daria. Turning now to crude, keeping it in the commodity space, oil headed for its biggest weekly gain since October. Nadia Martin-Wiggin of Svenland Capital writing, the market was increasingly preparing for prices in the 50s before these Russian sanctions and increased political risk in Venezuela short term, while the pain threshold for Trump is likely in the 70s. Nadia joins us now. Nadia, there's 3 big geopolitical stories with 3 big producers, Venezuela, Nigeria overnight, as well as Russia. How do you see this all seeping into the oil market?
Thank you. So number one is the concern on the shipping side, because the IEA, all the forecasters have been saying that we've been building supply versus demand into Q4. And even by Svenland Capital's analysis, we expect those builds to be at around 1.2 million barrels per day, up to 1.5 million barrels per day in the first quarter, while we have extremely high levels of oil on the water. Why is that? Well, we're having a delivery problem. Number one, Russia is struggling to deliver oil into China. There have been sanctions put against individual ports by the US that are being enforced in China. Then we have India again pulling away from buying this Russian crude. When initially we had the Rosneft sanctions and Lukoil sanctions announced, they pulled back, they bought a lot of crude oil, and then they actually reoffered it and started buying Russian oil again under the headline of other barrels. We now saw in the physical market in the last week that they are again buying up other producers' barrels because they're worried about the US. We then have the Venezuela side, and that blockade is meaning that Venezuela is unable to export their 1 million barrels per day of crude that they've been exporting. And they're also unable to import naphtha, which they import from Russia, for example, to make that Venezuelan crude liquid enough to load onto a tanker. So this military blockade that's the Trump administration is focusing on rather than strikes is affecting that physical market on the water coming out of Venezuela. Finally, on the Nigeria side, it just reminds the market that there are geopolitical tensions. Right now, there have been no reported outages in Nigerian production. Nigerian production is around 1.2 million barrels per day, but it raises the risks, of course.
Thank you for that, Nadia. So tell us a little bit about gold, because you have something in your note that really caught my attention. We're just talking with Tatiana, who's talking about central bank buying being a source of strength for demand for gold and also ETFs as well. But you talk about Tether and how there's a connection between Tether and the rallying gold.
Yes, so this is where when we think of that crypto world, it's not only looking at the dollar anymore. They're launching gold-backed coins. And this is where Tether, we know in the third quarter, bought around 35% more physical gold than we had the largest buyer, which was the Kazakhstani central bank. So this is when we start to look at that demand side. The new player in town is on the crypto side, and they have an understanding that it needs to be backed. And we have U.S. treasuries, and then they're behaving like the Chinese central bank that is not only holding U.S. treasuries, it's also holding physical gold in their vaults.
When it comes to physical gold, are you going to potentially up your price target for year-end next year, given the historic rally we've seen this year?
Yes, our near-term target is around $4,800 because
You're close.
of the momentum. I know, we're getting there. I just in terms of the momentum, because what we've seen in the part of the Chinese central bank in particular is once we hit these all-time highs and a lot of momentum, for a couple of months, then they pull back for a couple of months. And this is where Poland was the largest buyer, and then they kind of pulled back, and then they came back into the market in November. We'll see where they were in December. But this is where, they have a structured buying program that they can affect on that part. When it comes to the crypto side in Tether, we just think that they will continue buying because comparatively, they have a lot of bandwidth in terms of what they need to build up. When we think about central bank holdings and the Bank of England, they have 660 million tons of gold. The Kazakhstan central bank bought 16 tons, not million tons, 16 tons of gold in the last quarter.
Nadia, thanks so much for your time this morning. Nadia Martin-Wiggin of Svenlin Capital. And of course, earlier joining us, Tatiana, to discuss her outlook on what's going on in terms of the metals. We have another hour prepared for you. Coming up on the program, we're going to be hearing part of our conversation Ed Ludlow had with Jensen Huang, Sarah Kunst of Clio Capital, Eric Kane of Bloomberg Intelligence, plus Aaron McLaughlin of the Conference Board. You're watching Bloomberg Surveillance.
The crowding into those mega cap names has led to crowding out of many other high-quality blue-chip names.
Balanced portfolios make a lot of sense heading into 2026.
It could be in an environment where we're still able to carve out new highs.
Earnings are going to be what drives stock prices.
We want to make sure we're managing risk well next year.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning, 7 o'clock in New York. Welcome to Bloomberg Surveillance. I'm Annmarie Hordern alongside Scarlett Fu this morning. Jonathan still on paternity leave. Lisa is off. We are having a quiet morning on Wall Street, at least that is. It is not so quiet in the world of geopolitics. Last night, the United States launched a military strike in Nigeria against ISIS targets. The administration is also still in pursuit of a Venezuelan-linked oil tanker. They've been in pursuit of that tanker since Sunday. And Ukrainian President Volodymyr Zelensky says he plans to meet Trump in the coming days. Scarlett, this meeting could be as soon as Sunday.
As soon as Sunday, and of course, Ukraine has more incentive to get this done quickly, whereas Russia can afford to sit back on its heels and wait it out. And indeed, that's kind of been what's been happening for the last couple of weeks and months. You mentioned the strike that the U.S. Did on Nigeria, northwestern Nigeria. And of course, this is the latest U.S. military campaign against a non-state adversary because last week, as you know, the U.S. launched a large-scale airstrike on more than 70 targets across Syria in response to deadly attacks on U.S. forces.
And all of this at the same time as they are still in pursuit of Venezuelan-linked sanctioned oil tankers. I believe this one was coming from Iran. They have not been able to get this tanker just yet. They still are in pursuit of it. They've been in pursuit since Sunday. And what's interesting is all these stories are moving one part of the market, and that's in the commodity space. Potentially, individuals are going to places to hide, like precious metals, like gold, which we've seen be on an absolute tear this year, but also oil. But what's so interesting about oil is when you think of Nigeria or Venezuela, potentially that would mean the price should strike higher. Yeah, more pressure. But if President Trump and Volodymyr Zelensky are really on the cusp of a peace deal, and Russia potentially would come along, and you make a great point. At this moment, it doesn't look like Russia right now is going to come along with this peace plan, but actually that would mean direction of travel lower for the oil market.
Right, so the geopolitical tensions are basically keeping oil right where it is. And the backdrop to all of this, of course, is there's plenty of supply. There's no shortage of supply thanks to OPEC.
Yep, IEA was talking about coming into this year with an absolute glut of over 4 million barrels. All right, coming up, Sarah Kunst of Clio Capital. Stocks trade near all-time highs. Bloomberg's Laura Davison as Ukraine and U.S. gear up for another round of peace talks. And Erin McLaughlin of the Conference Board as consumer confidence continues to fall. We begin this hour with stocks flat following the latest record close. Sarah Kunst of Clio Capital issuing some cautions for the year ahead, writing, "I'm not super bullish on assets you can't see. It's been a year to cap off a few years of total AI dominance. Will it continue? It doesn't look that way." Sarah joins us now. Sarah, thank you so much, and I loved your note. So tell me about you're not super bullish on assets you can't see. So what are you bullish on? Is it all just, gold and silver?
I mean, I certainly think when you look at the way that we've seen that appreciation across, platinum, gold, silver, those are huge gains. The problem with those kinds of assets, of course, is that they don't produce anything. They don't grow in intrinsic value. If you had an ounce of gold 10 years ago, you still only have an ounce of gold. It's just worth a lot more on paper at a melt price. And so, I think right now we're just seeing a bit of a struggle to figure out where to focus that feels like there's going to be some real solid fundamentals and price appreciation. And that is a very hard needle to thread.
Why is it so hard to figure out where to focus? Is it just because of this holiday period or because the data has been mixed when you look into 2026?
I think the data has been mixed for a while. We all obviously, when we look at our little accounts, we see a huge amount of appreciation across the AI names. There's a question of which ones and how long can that run for. Some of them I'm much more bullish on than others. And so I think that's part of it. And then there's also a question about sort of where's the consumer at? How good is the data right now that we're getting, particularly from the federal government? And so there's a lot of uncertainty, but at the same time, people have been making a lot of money over the last few years and they need to put it somewhere.
They've been making a lot of money, especially off the AI trade. But as you point out, there's a lot more skepticism. There's a lot more discerning between the winners and maybe the also-rans. And we're seeing that play out in Oracle. The bonds have not been doing as well. The credit default swaps on Oracle have certainly spiked as well. How are you thinking through the potential, not losers, but the also-rans here of the AI narrative? Oracle seems to be one that investors are fixated on, but how else can you start to come up with a list of companies that, may be getting overextended because of their link to AI?
Yeah, I mean, certainly anytime we hear the word credit default swap, we all get our little NOM flashbacks to 2008. Yeah. The reality is, I think that companies like SoftBank are doing some things that feel a little risky. You have SoftBank who's sort of selling all of, they have this this huge commitment to invest in OpenAI, but to get that money to invest, they have to go sell all of their Nvidia shares. They have to figure out, where to get the cash from internally by selling off public equities that are doing decently well to put more money into OpenAI, which is a company that, at current rates barely has enough runway to get through 26. And so that's a little concerning. In general, Sam's able to go figure out how to raise money, but I don't know how many times that trick is going to work in the future, because we know that the subscription revenue isn't really there. They're spending a tremendous amount of money. A 15-second video on Sora can cost them $5 to make. That's a lot. And so, there is concern, I think, that some of these other companies that aren't sort of foundational are maybe just playing a little bit too close.
Yeah, and when you look at the potential winners here, obviously Nvidia, because of its role in the supply chain, is paramount. But you've also picked out another winner that so far investors agree with, because you look at the best performing stocks in the Mag 7. Alphabet is up 66%. Nvidia is the second best performer, up 40%. Why do you see Alphabet as a clear winner here?
I have been a big fan of Alphabet in the AI space since at least 2023. I've been talking about this while everybody around me was saying that Alphabet's missing the moment. And I said, no, they created the moment, right? You go back to that 2017 academic paper, Attention is All You Need, which is sort of the Satoshi white paper of AI. And all of those founders, they were onto something, and they've gone on to create absolutely massive companies. A lot of the early innovation at OpenAI came out of Google alums. My company Grok, which just announced a big transaction with Nvidia, they came out of Google. Google has had and continues to have some of the absolute smartest researchers in the world on AI, and they have the infrastructure to say, hey, we're going to bake Gemini into your search results, into your enterprise results, into your email, and you're going to pay us for it because we are an advertising company. And so they have such a huge advantage that it's been almost funny over the last few years to hear people think that they weren't playing the game, when in reality, they kind of are the board.
Sarah, does it concern you, though, that we have a circular economy of AI? These tech companies just keep financing themselves?
I think that that's certainly relevant. And I think that that's even more relevant when you look at some of the startups, kind of that everybody passes $100 around in a circle and calls it GDP is both a meme, but also a real cause, I think, for some concern. And so I think the question going into 26, you're going to see people get a lot savvier when they look at these companies to say, where is this money actually coming from? And is there an end consumer, an end enterprise who is actually paying for AI, who's paying for this utility, or is it just sort of everybody passing money to the service provider to their left?
What would it take for you to like Oracle once again?
Oracle historically has been a perfectly good company because it is boring. We don't have to think about it much. I think that their fingers are in a lot of pots right now. You see their founder and CEO, their founder, Larry Ellison, has a $40 billion personal guarantee so that his son can do some succession style media company buying. They're, buying TikTok and they're part of that deal. They're just involved in a lot of things right now that are very far away from their sort of bread and butter. And obviously, their close relationship with Washington helps. But at the same time, I don't know if all of these things are going to work out the way they think they will. And this is just a tremendous amount of money that you're talking about. And so I would like Oracle to be boring again.
Larry Ellison seems to like it the way it is right now, Sarah. Whether it's Oracle, whether it's Alphabet, which is your pick, or whether it is Nvidia, which remains kind of the market's pick, how are you thinking about the power needed to generate all the resources in order for these data centers to be up and running, not just at the start of this revolution, but to take us through the next couple of years? A lot of people are picking utilities and thinking about nuclear energy as the solution.
Yeah, I mean, this kind of reminds me back in the day, you'd see this a lot with Bitcoin. You all of a sudden have people getting really excited about things like dams in northern New York, or sort of where do you get this excess power from? I think that you will see, kind of ironically, a focus on renewables, a focus on clean energy, because it's often cheaper. So where can you get wind? Where can you get solar? All of that. And I think that we're going to find out that a lot of these sort of of data center deals that you're seeing across rural America and the world, they're going to run into a very real problem of places like Texas where the electricity can be insanely expensive because of the way that they regulate their utilities. It's going to be really, really tough to say, hey, we have a bunch of empty land. Of course, we're going to build a data center on it. And now everybody who lives in a 300-mile radius is going to pay more for electricity. I think you're going to see a real amount of pushback that will get political. And so I think that is going to be one of the bigger questions right now. I don't do much in utilities, but I do think that it might, in a very sort of funny backwards way, help usher in more of a green revolution.
Sarah, thanks so much for your time this morning. Hope you had a lovely holiday with you and your family. Sarah Kuntz of Clio Capital. We're going to be speaking more about what's going on with the AI data center build out. But to Sarah's point, it is a political issue. We've already seen that happen in the Virginia midterm elections, as well as in New Jersey. Prices for electricity, even though the president loves to talk about drill, baby, drill, and gasoline prices are down, but electricity prices are actually high.
Yeah, and that tilted those states towards candidates that were pushing affordability.
Yep. Anyone who talks about affordability, that's your ticket to winning. All right, let's get you an update on stories elsewhere we're watching this morning. Yahira's back with your Bloomberg Brief. Hey, Yahira.
Hi, Annmarie. The U.S. launched a military airstrike against ISIS targets in Nigeria. President Donald Trump saying he ordered the precision hits at the request of the Nigerian government, which has been struggling to contain increasing levels of terrorist attacks in parts of the country. Defense Secretary Pete Hegseth warning more strikes are coming if the group continues to target innocent civilians. Meanwhile, holiday travel is hitting a major wall with a winter storm expected to descend on the tri-state area. Over 400 flights have already been canceled at JFK, LaGuardia, and Newark. Forecasters are expecting up to 8 inches of snow from Friday afternoon through Saturday, and New York City is issuing a travel advisory for the duration of the storm. And Tesla is facing renewed scrutiny over its door handles. The National Highway Traffic Safety Administration said it's evaluating claims that the mechanical door release is, quote, hidden, unlabeled, and not intuitive to locate during an emergency. The move expanding the federal examination of Tesla's doors following a Bloomberg investigation. That's your Bloomberg Brief. Annmarie.
Thanks so much, Yahira. You know, Scarlett, what a waste of almost up to 8 inches of snow. If I was in school, I'd be very upset because you won't get a snow day. The kids are already off.
But it's good overall that it's happening on a Friday night into Saturday because you don't have as many people commuting. Like, people can afford to stay off the roads.
True, but a lot of people are traveling. They're heading to the airports.
Yes,
JFK, LaGuardia, Newark.
Maybe by Sunday it'll be all sorted out.
Yeah, hopefully. All right, up next on the program, Ukrainian President Zelensky heading back to the U.S. Optimistic peace talks, potentially. Speaking of Sunday, that's when reports are that he will be landing in Florida. Bloomberg's Laura Davison joins us next for more on that story. You're watching Bloomberg Surveillance. Good morning. Welcome to Bloomberg Surveillance. I'm Annmarie Hordern. It is the day after Christmas. We are seeing very light volumes, thin trading today, but the markets are open, even though the president has made it a federal holiday. S&P 500 futures are unchanged. On Wednesday, we did notch a 39 record high of the year. So Santa Claus rally at this moment, somewhat in full swing. 10-year yield, 4.13%. All the action, once again, is in the commodity space. Gold up 0.7%, surpassing 4,500 once again. And silver at one point did pass $75. It's now just shy of that, but we are up 3.5%. Under surveillance this morning, Ukrainian President Volodymyr Zelensky saying he plans to meet with President Trump in the coming days. Zelensky signaling a lot could be decided before the new year, after a Christmas Day sit-down with U.S. envoys Steve Witkoff and Jared Kushner. Bloomberg's Laura Davison joins us now. Laura, thank you so much for joining us. What can you tell us about this potential meeting between Trump and Zelensky?
Yeah, so this meeting is scheduled to happen as soon as Sunday, and this is really a marked shift from the tone Zelensky was taking just a few days ago, where he was a lot more pessimistic that he believed that the Ukrainians and Russians could agree to a peace deal. There's been weeks of sort of shuttle diplomacy with U.S. officials meeting with both Ukrainian and Russian officials separately, but never really making much of a breakthrough. The key sticking point in this 20-point peace plan that's been put together is whether it's territorial issues and whether Ukraine would be willing to give up some parts of of their territory that they currently still control. That has been one key demand from the Russians. The Ukrainians have been quite sour on that idea. So Zelensky is going for this face-to-face meeting down in Mar-a-Lago with the president to hash out some of these final details, potentially to move forward with a peace plan.
And of course, we know that Ukraine has been deep in negotiations with Steve Witkoff and Jared Kushner on this proposed 20-point peace plan. Has Russia given any way at all on what it's looking for? Or it's kind of waiting until the last minute to weigh in?
They have been waiting to the last minute to weigh in. They have been very clear that, what they want are, kind of some of the contours, sort of the maximalist view of Russia getting all that it wants that they discussed back with Trump at this summit in Alaska over the summer. So this is, kind of the key sticking point and why we've heard a lot of pessimism during these talks, and that, Ukraine has been sort of doing some negotiating, but Russia has really stood firm. We'll see, whether this meeting with Trump and Zelensky is able to create any breakthroughs that the Russians might be able to agree to.
Annmarie and I were talking earlier about how there's definitely urgency on Zelensky's part, on Ukraine's part, and there doesn't appear to be much on Russia's part. In terms of the president and where he sees a timeline developing, I know that initially he had set this deadline of Thanksgiving for Ukraine to agree to a peace deal with Russia. Do we have any kind of targets in terms of timelines?
He has not set a specific new timeline here. Trump once and has repeatedly said he wants this done as soon as possible, though he's kind of suggested that, if talks are progressing, if he sees progress, he will let, things drag on a little bit forward to reach a deal. But Trump here, really his ultimate goal is to get a deal so he can herald peace. He is less concerned about the specifics, but of course, that is very of utmost importance to the Russians and the Ukrainians.
Yeah, Laura, I remember when the president would say that he would solve this crisis day one, at least when he's on the campaign trail. Now we're in the final week of 2025. At the same time, they are still going after a tanker in Venezuela, and there was strikes overnight on Nigeria. How is all this, you think, going to play with his MAGA base?
We've already started to see cracks here. Of course, Marjorie Taylor Greene, who is now effectively, totally divorced from the president, was the first to really criticize some of these, overseas conflicts that the president has been engaged in. But as time goes on, particularly if the White House needs to go to Congress for more money on that, this could be a huge rift going into the midterm elections.
Laura, thank you so much for joining us this morning. Bloomberg's Laura Davison there. Turning to the impact of artificial intelligence, water constraints in Texas threatening data center growth, calling attention to resource demands. Eric Kane of Bloomberg Intelligence joins us now for more. I've heard a lot of people throw cold water, excuse the pun, on potentially what could be some of the bottlenecks when it comes to AI. Tell us about what's going on with water specifically in Texas.
Absolutely. It's a good question. And one of the things, of course, that we're seeing is there's a lot of discussion about the energy demands associated with AI. I think the water demands are a little bit less well understood. So just to broaden the context a little bit, one thing that we see is predicted growth to about 1.1 to 1.7 trillion gallons of water used annually for data centers across the world, which is about 4 to 6 times the amount that the country of Denmark consumes. Within Texas has become one of the fastest growing states for data centers after Virginia. And in Texas alone, what we're expected to see is growth of water use associated with AI of about 800% over the next several years.
Wow. So if there's this much demand for water, how do Texas regulators, Texas authorities start to meet that demand? What are some of the out-of-the-box ideas that they're entertaining?
Right. It's a good question. One of the things that we saw actually with this last election cycle was the passing of Proposition 4, which was actually a constitutional amendment that was, again, passed. And essentially what that amendment said is that Texas voters wanted to allocate $1 billion a year to address water scarcity, water infrastructure, and also flood control, basically over the next 20 years. So that will begin in 2027 and go out for 20 years. So in my mind, that starts to demonstrate that voters, regular people, are starting to recognize the concerns associated with water. And with respect to AI, what we're starting to see, of course, is some of the big operators, Meta, Microsoft, for example, are starting to rethink how they're ultimately using water and ultimately looking at closed loop systems, which they claim will ultimately use far less municipal water.
Does that mean at the end of the day that there's a natural constraint on how many AI data centers can be built in Texas?
assuming they kind of continue business as usual, where they're continuing to draw as much water as they do, and if you look at some of the estimates, it's around 500,000 gallons per day for kind of a medium-sized facility. So assuming they wanted to continue business as usual, then there would absolutely be kind of natural constraints. But again, what we're starting to see is some innovation, and the state at large is starting to take measure. They're looking into more desalination, treatment, and the oil and gas side, they're looking to actually filter the produced water, not only kind of take minerals out of that, but also treat it and potentially use that for other resources as well.
You mentioned what happened with Proposition 4 in Texas. Do you think we could see more federal spending go to Texas specifically because of these issues?
It's a good question, and one of the things that we've seen with the recent administration, with respect to kind of any funding related to environmental issues, impacts of climate, is basically that funding has been removed, right? So we're starting to see states having to essentially fend for themselves when it comes to issues like water or storm recovery. So I don't anticipate seeing a lot of that on the federal level. I think the one example where maybe you would see an exception to that rule is with respect to agriculture. Obviously, agriculture is a big driver of GDP in Texas, and we've seen many examples over the last year where things like the cotton crop have been extremely damaged by drought, and you do see subsidies coming in the case of agriculture.
Well, it's a huge political issue, and Scarlett and I have been talking about it all morning with electricity prices rising. Most people would say you need an all-of-energy approach, but this administration is also pausing wind projects. Right. Is that going to be a problem for them?
I think it is going to be a problem. I think ultimately what we're seeing, of course, is with the development of AI, not only in Texas, but across the country, there's going to be increased demand for energy, right? We know, of course, that things like natural gas and coal are ultimately what the current administration kind of prefers from an energy standpoint. But those are much slower to ultimately build out than renewables. So, back in Texas, what we're ultimately seeing is, some new deals where they're ultimately looking to co-locate data centers with renewable energy because it's cheaper, it's faster to develop. So we do ultimately see, a potential kind of bottleneck associated with energy.
Yeah, it's something that Sarah Kunst of Clio Capital was just talking about as well, that build out of green energy as a way to solve for this. Are there other states in a similar bind as in Texas?
I think so. I think, Virginia is another state that has seen a massive growth in kind of AI data centers. So we're starting, to see energy concerns there. But, nationally and also abroad, we're starting to see the same issue play out.
Yeah, it's the electricity prices, if you live near a data center, have been going up. That was massive play in Virginia when it comes to those elections. Eric, thank you so much for joining us and coming in on the day after Christmas to be around the table with Scarlett and I. Eric Kane of Bloomberg Intelligence. The administration potentially going to have a problem with this. They love the AI trade. They want to go all in. But the problem is if electricity prices are going higher and you see the polling, people just still care about inflation and affordability.
And even betting on nuclear energy is not a problem, not a solution that solves things immediately, right? That's going to take a couple of years to play out.
And when it comes to coal, did you see the president joking with a child over the weekend during the NORAD calls?
Oh, no. What did he say?
He said, the child said, "I don't want coal." And Trump said, well, it's clean, beautiful coal. Right?
I don't know if he sold it well.
Yeah, I don't think so. I don't think I want coal, and I definitely don't think it's clean or beautiful. Coming up, a look back at Bloomberg's Ed Ludlow's one-on-one with Nvidia CEO Jensen Huang. Plus, Yahira is back with your morning movers. Miners getting a major boost as precious metals hit new highs. You're watching Bloomberg Surveillance this morning. Good morning. Welcome to Bloomberg Surveillance. I'm Annmarie Hordern. Alongside Scarlett Fu this morning, Jonathan is on paternity leave and Lisa is off, but she'll be with you next week, guiding you into the new year. Gang will be all back together in 2026. We have markets relatively unchanged. S&P 500 on Wednesday before Christmas. In the spirit of that Santa Claus rally, we did have another record high, the 39th record high for the year. The Santa Claus rally traditionally takes place in the final 5 trading sessions of the year and the first 2 of the new one. So potentially, Scarlett, we can get another record high. I've been thinking about how this year has been basically pre-Liberation Day, post-Liberation Day, and once the market was past what everyone says peak tariff uncertainty, it was off to the races.
Yeah, and there are record highs before Liberation Day and there are record highs after Liberation Day. Worth mentioning as well that global stocks have been on a tear. The All-Country World Index, according to MSCI, up for a seventh day and has now gained about 22% this year.
Wow. Okay, so maybe potentially some individuals also looking internationally. We're 2 hours away from the cash open. Let's get you some morning movers with Yahira Anand. Hi, Yahira.
Hi, Annmarie. The trade that's worked all year keeps paying off. Precious metals are surging once again this morning, and we are seeing that helping lift mining stocks. Kerr Mining up 3%, Hecla Mining up 2.6% as we see gold, silver, and platinum reach fresh all-time highs. Fuels, of course, by central bank buying, geopolitical risks, the same stories we've heard about all year as we've witnessed this precious metal rally. Meanwhile, moving on to Micron, if we hold at these levels, Micron is set to open at a fresh all-time high. The stock is up 1.6% in the pre-market on no real catalyst on this quiet day of trading, but it is worth noting that this comes after a 230% run for this stock this year, fueled, of course, by strong demand for its memory chips, using everything from computers to AI servers. And remember, just earlier this month, they had an earnings report, and the CEO said that demand continues to outstrip supply, and they see no signs of that abating anytime soon. And we end on Biohaven stock. Those shares are plummeting, down nearly 15% now in the pre-market after one of their experimental drugs to treat depression failed to meet the goals in a mid-stage study. Analysts say that it's disappointing but not entirely surprising given the complexity of these clinical trials. Annmarie.
Yahira, thanks so much for that. On our radar this morning, the U.S. launching a military airstrike against ISIS targets in Nigeria. President Trump saying he ordered the precision hits at the request of the Nigerian government. Defense Secretary Pete Hegseth warning more strikes could be coming. Elsewhere, a sanctioned oil tanker being pursued by U.S. forces turned away from Venezuela and retreated out to the Atlantic Ocean. Sources telling us here at Bloomberg, the U.S. Coast Guard encountered the ship, Bella 1, and instructed it to move. Officials do not expect it to return. And holiday travel is hitting a major wall with a winter storm expected to descend on the tri-state area. Over 400 flights have already been canceled at JFK, LaGuardia, and Newark. Forecasters are expecting up to 8 inches of snow from Friday afternoon, that's today, around 4 p.m., through Saturday. Let's stick with that story. Heavy snow expected to begin in New York City area later today. The winter storm already canceling hundreds of flights in the middle of holiday travel. AccuWeather's Bill Waddell joins us now with the latest. Bill, what do we need to know?
Hey, good morning. Yeah, this is going to be a messy storm, a lot of impacts for holiday travelers. The good news is it's going to be a quick moving storm, and the timing, hopefully a lot of people won't have to be traveling through the worst. So you can see on the map already, we've got the snow, wintry mix through Michigan, moving its way on east here. And when it comes to the snow impacts, New York City, AccuWeather is looking at 3 to 6 inches of snow for the city. Philadelphia, Boston, 1 to 3 inches of snow. But take a look at this dark blue zone here right north of New York City, Catskill Mountains. AccuWeather meteorologists say this is the zone where we could see 6 to 12 inches of snow. That's not the only problem with the storm. There's a really messy component here. Take a look at these dark pink areas, southern Michigan, including Lansing, as well as central and western Pennsylvania. This is where we could see those icy impacts, could be significant in those areas. So there could be a mix of sleet, ice pellets, freezing rain. The big concern here in these areas, if we start to see any ice accumulations on the power lines or tree branches being weighed down, that's where we could see some big problems with some power outages. So you could see this is a big, messy storm here. And when it comes to the travel forecast, this is mostly for the second half of the day into the night. But you could see major holiday travel weather impacts expected across the Great Lakes into the Northeast. Also, our friends on the West Coast as well, still dealing with a lot of rain, flooding issues, and mountain snow.
Absolutely. Boy, that paints the real picture of everything that travelers need to contend with. Bill, just very quickly to follow on what you said about what's happening on the West Coast, any relief on the way for Southern California?
There is some relief on the way. They've really been getting it the past few days here. But when we look at the map, today is supposed to be the last big day for the rain impacts before things really start to wind down here. But Los Angeles, more than 2 inches of rain in some spots. It's really those mountains and the burn scar areas. I was out there covering those big wildfires back in January. Of course, all of the soil left charred. So all of this rain running down the mountainsides, that's where the big concern is for those mudslides, debris flows. That's why so many people were asked to leave their homes voluntarily over Christmas.
Bill, thank you so much for this update. Bill Waddell of AccuWeather. Scarlett, that's pretty incredible. 5 to 9 inches of snow, which is what the National Weather Service is expecting. I think Bill said actually it could be as high as 12 inches of snow in the tri-state area.
Yeah, in certain pockets, and freezing rain just makes it even more complicated for anyone who does need to get out of their house after this quick-moving snowstorm. But that makes it not so quick in the end.
Yeah, everyone, please be safe out there. And also, if you're flying, check your flights. Turning back to stocks, Nvidia shares are up nearly 40% this year, nearly doubling the performance that of the NASDAQ 100. The company's Blackwell chip becoming the engine of the AI industry this year. In an exclusive interview, the company's CEO, Jensen Huang, told Bloomberg's Ed Ludlow Blackwell says he sees no sign of slowing down.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world. Our partners, TSMC, our memory partners, SK Hynix, Micron, Samsung, are doing a fantastic job supporting us. And all of our systems partners, Foxconn and Quanta and Wistron, our packaging partners, everybody's doing a fantastic job supporting us. And we've done a good job planning for a very, very strong year. And we've done a good job planning for Vera Rubin. So sales are off the charts. NVIDIA GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Jensen, what's the road ahead for Vera Rubin? It's one of the most common questions we get for you of how that ramp will go relative to what we saw with the Blackwell generations.
Well, the silicon for Vera Rubin, 7 different chips are back in our labs. And the bring up is happening across engineering teams. Probably a couple of 20,000 people are working on bringing up Vera Rubin, from silicon to systems to software to algorithms. People are working around the clock, and this bring up is going beautifully. We're on track to deliver Vera Rubin about Q3 timeframe of next year, continuing our once a year cycle. Vera Rubin is already assured a huge success. Everybody's incredibly excited about it. Can't wait to show everybody. And then one last thing is that the rack architecture, the rack scale architecture is completely revolutionary. It includes a scale up switch called the NVLink. NVLink 72, our 5th generation, is the only one of its kind in the world. This rack architecture, which is incredibly complex, started with Grace Blackwell, then Grace Blackwell Ultra. It is transition to Grace Blackwell Ultra is incredibly seamless. The same rack scale architecture is going to be used for Vera Rubin. And so the supply chain is all used to it. This complexity that we enjoyed with Grace Blackwell transition, we're now incredibly smooth running. And so I think Vera Rubin is going to be just really smooth, and we're going to ramp it really hard.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, Nvidia seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast guidance that we showed, 0. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally. The Chinese market is very large. This year, my guess is probably about $50 billion. It's great for the American people that we're able to compete in the Chinese market. It's great for the China market that we're able to provide NVIDIA's technology to them. It's great for the rest of the world as Chinese software companies and Chinese open source models leave China and are used all over the world. And so I think it's fantastic that it would be fantastic if we're able to participate in the China market. But for now, we should just assume our NVIDIA's forecast for China market is zero. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume zero.
Jensen, we can see where the hyperscalers are getting the money where they have the money to deploy and build. But you mentioned Anthropic. With Anthropic or indeed OpenAI, they have tens of billions of dollars of commitments around the world. Very simple, like how do you know that OpenAI is good for it, that it will be able to find the money?
Well, we're thoughtful, along with OpenAI, thoughtful in aligning on and taking into consideration visibility of demand and their financing capabilities. All of that has to be in accordance, has to be aligned, has to be coherent before we start to build out. And so I think the ambition's large, but the execution is disciplined. And that's really, really important to recognize. We're very disciplined with our investment. We're disciplined with our build out. These are very large scale investments. And so the two teams are quite disciplined, very disciplined in thinking through the investment levels. Now, it's also important to take a step back and realize that OpenAI, Anthropic, these are the fastest growing company in the history of humanity. Their offtake, their end market demand is absolutely real and absolutely incredible. And you could see that they're really struggling to keep up with the demand that they have. The engineering teams, we work incredibly hard to make sure that we bring them on more capacity, but also optimizing their stack so that the usage of whatever capacity is as efficient as possible. And meanwhile, there's so many new use cases that they want to put out into the world, and is currently limited by the capacity they have. And so this is a really important time. You're seeing an exponential growth in the amount of compute demand necessary for AI. You're seeing an exponential growth of adoption and use of AI, and the number of applications that are going to be using these AI is also growing. And so we've got to do our best to support the scaling out of two of the most consequential companies in history, and we're delighted to be partnered with them.
Jensen, investors have been worrying about depreciation. Software can actually extend life. Like there are A100s out there in the real world still at full utilization. Are people underestimating how long your chips stay useful, or are they kind of misunderstanding in the context of depreciation how you're handling generation to generation updates of GPU?
NVIDIA is unlike any other accelerator. And the reason for that is because of CUDA's diversity of capability and versatility. Remember, I said two things earlier. I said the fact that NVIDIA participates and could accelerate every phase of AI, pre-training, post-training, and inference. We're the only architecture in the world that does that fantastically. The second thing we do is we run every single model. And so most agentic systems, most clouds are running so many different diverse type of models, language models, vision models, biological models, chemical models for all the different fields of science. NVIDIA could be used across the entire lifespan of the technology. And so if you look at products that we shipped, Ampere A100, we shipped 6 years ago. But because we're continuing, our install base is so large, our diversity is so great, we could continuously update our software, bring value to our customers on the one hand, but because our versatility is so great, based on the capability they need, they could use our GPUs for a very, very long time. Now remember, A100 is 6 years old. However, it is still an order of a magnitude faster than any CPU could put to bear. So it is still the best computer. It is still the best processor for much of the workload in the cloud. And most people misunderstand that because unlike us, most accelerators are kind of singular use because they don't have diversity, because they don't have versatility, because they're not great at every phase of AI. Once they're used for whatever they were designed to do, their value falls off a cliff. That is not true with Nvidia.
Nvidia CEO Jensen Huang, in one of his many conversations he had with Bloomberg's Ed Ludlow in 2025. Let's get you an update on stories elsewhere we're watching this morning. Here's your Bloomberg brief with Yahira. Hey, Yahira.
Hi, Annmarie. Former Malaysian Prime Minister Najib Razak has been found guilty of abuse of power and money laundering in connection to a multi-billion-dollar fraud case. Najib, already in jail due to other convictions, has denied any wrongdoing and can appeal or apply for a pardon. He's due for release in 2028. Meanwhile, oil prices are headed for their biggest weekly gain since late October. The spike comes amid the partial U.S. blockade of crude shipments from Venezuela and a military strike by Washington against a militant group in Nigeria. Sources telling us here at Bloomberg that the White House has ordered commanders to quarantine Venezuelan oil for the next 2 months, which could keep prices elevated. And Japan's inflation cooling more than expected in December, pushing the yen lower. Prices excluding fresh food rose 2.3% compared to last year. The data supporting the case for the Bank of Japan to take a cautious approach on further rate hikes. Economists expecting the bank to raise rates roughly every 6 months. That's your Bloomberg brief. Annmarie.
Yahira, thanks so much. Yahira will be back with us in about 30 minutes' time. Up next, consumer headwinds.
The consumer is facing significant headwinds as we wrap up the year. The consumer is not nearly as euphoric in this holiday season as they were in previous ones.
Aaron McLaughlin of the Conference Board will be joining us next. A conversation you don't want to miss. You're watching Bloomberg Surveillance. Good morning, and under surveillance this morning, we're going to be looking at the consumer and the headwinds that lie ahead.
The consumer is facing significant headwinds as we wrap up the year. Labor growth is zero, wage growth is compressing significantly, inflation is up. That is not a good combination for spending, for household spending in the new year. The consumer is not nearly as euphoric in this holiday season as they were in previous ones.
Here's the latest. U.S. consumer confidence dropping for a fifth consecutive month in December, according to fresh data from the Conference Board. Aaron McLaughlin of the Conference Board writing, expect real GDP growth to weaken amid a fragile balance of resilient labor markets and softening consumer demand due to tariff-induced inflation. Aaron joins us now. Aaron, thank you so much for joining us, and hopefully you had a lovely holiday. When it comes to the consumer and the latest readout, I was struck by how more consumers are actually starting to be also worried about keeping their job.
Yes. So we find that consumers really tighten up when they don't have jobs. And so the concept of deteriorating business conditions, the weight of tariffs and inflation, all definitely influence consumer spending and consumer sentiment. But concepts around rising unemployment, we've seen it tick up now to 4.6. In the concepts, there are less jobs out there. Jobs are not as plentiful, will really weigh on the consumer in 2026.
We know the government shutdown did not help matters. It made people feel more nervous, and it certainly created a lot of uncertainty. And I know it's over, but I bring this up because we could face another government shutdown in January as well. So how do we fold in the government shutdown and what that does to consumer sentiment, even as it's become a more frequent occurrence?
Well, that was the longest shutdown we've had in modern history that we just had. It certainly impacted economists. It impacted consumers, especially this year. Consumers are just facing its sort of constant news about politics, geopolitics, tariffs, inflation, and that constant news impacts them. And so another government shutdown will certainly also impact them, even if they don't feel the immediate effects of a shutdown. And sort of the news today and the concept that there could be rising oil prices and oil and gasoline, excluding fuel oil for homes, has been pretty, low as far on the inflation spectrum. But even news like we're hearing today, if prices go up, how does that impact consumers?
The administration has been out there trying to paint a picture of a robust economy. Howard Lutnick, the Commerce Secretary, went on to talk about the third quarter GDP growing more than 4% and how that was a sign that things were better. He also mistakenly equated that with an increase in people's pay as well. How is that contradiction, that seeming contradiction of data that shows the economy is holding up well, balancing with this sense from consumers that things are not getting better necessarily, especially on the job front?
Well, consumers are not paying attention to GDP the way that we are, in the way that economists and business and financial markets are necessarily paying attention to these readings. What they really feel is the effects of prices for things that they buy every week, every day, every month. And so those things include coffee, which has gone up in price 20 to 40%. Beef and other proteins at the grocery store have gone up. And some big structural costs have really not come down. The cost of housing, and in particular insurance, and the price of a mortgage, while it has come down a little bit, is nowhere near as low as it was pre-pandemic. And so when you see some of these really big price structural changes happen, that also weighs on consumer sentiment.
What about when you look at trade-induced inflation? What are you looking at for next year, given the fact that this administration will be renegotiating USMCA?
Yes, we really think that federal policy, particularly around trade and tariffs, is going to have a huge impact on consumers next year. Our three largest trading partners are Mexico, followed by China, followed by Canada. Those three trading partners, our agreements with them are not settled. We sort of kicked the can down the road 12 months from China, from November of this past year to November of next year. And then the USMCA, which is essentially NAFTA version 2, will enter a version 3 phase as it can be renegotiated. And that deadline is in July. And there is so much that we just trade between our three largest trading partners that there is really the potential for a lot higher inflation and price pressures on consumers for some items that we get that, again, include non-discretionary as well as discretionary items like food.
Erin, thank you so much for joining us this morning. Really appreciate your insight. Erin McLaughlin of the Conference Board. Coming up the program, another hour with Scarlett and myself, Victoria Fernandez of Crossmark, and also a conversation with the city CEO, Jane Fraser, looking back at 2025 and what it's meant for banking. You're watching Bloomberg Surveillance. Good morning.
The crowding into those mega cap names has led to crowding out of many other high quality blue chip names.
Balanced portfolios make a lot of sense heading into 2026.
It could be in an environment where we're still able to carve out new highs.
Earnings are going to be what drives stock prices.
We want to make sure we're managing risk well next year.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning. Welcome to Bloomberg Surveillance. I'm Annmarie Hordern alongside Scarlett Fu on this Friday. It's 8 o'clock. Jonathan is still on paternity leave and Lisa is off. As we've been saying, it's been very thin trading on this holiday season. We are in the midst of the Santa Claus rally. So Wall Street is quiet, but there's a lot of noise elsewhere, especially when it comes to geopolitics. Last night, the United States launched a military strike in Nigeria against ISIS targets. The administration is still in pursuit of a Venezuelan-linked oil tanker. They've been doing that since Sunday. And we're getting some more breaking news at this potential meeting that could take place between Ukrainian President Volodymyr Zelensky and President Donald Trump. There was speculation it could happen as soon as Sunday, and he's telling reporters that's what he expects.
Yep, we haven't heard officially from the White House whether this meeting is going to take place or not. So that remains to be seen. And of course, we're still waiting to hear from Russia overall on any kind of response to this 20-point peace plan that the three sides really have been negotiating.
What Russia has continuously been doing is try to draw out these talks. Ukraine says they've had no direct communication with Russia. Potentially, could this meeting on Sunday push them to having at minimum a trilateral agreement? Zelensky says sensitive issues such as Donbass, Zaporizhia, the nuclear power plant will be discussed. That's Europe's biggest nuclear power plant. Both these countries want access to it. It's going to come down to these territorial negotiations.
Right. The sticking points have always been the sticking points, even if they seem to have made some progress on security guarantees.
Absolutely. Let's check in where markets are this morning. We are 90 minutes away from the open. We do have equities unchanged.
Surprise, surprise.
Surprise, surprise. As Scarlett and I have been saying, it's thin trading, it's the holiday, but we did have a Santa Claus rally. Going into literally Christmas when Santa Claus came, we had the S&P 500. You know, we have to say that we do have some children watching, like my nephews. We did have the Santa Claus rally, 39th record high of the year. And all the action has been in the commodity space, especially right now, given the geopolitical tension. Silver just shy of $75, up 3.5%. Gold, 4,500. People are looking at 5,000 for next year. It's been on a tear this year. Biggest rally we've seen since 1979. Gold has been up 50%.
And you're right to highlight gold and silver, but we should also throw in there platinum and copper as well, both at record highs. Platinum topping $2,400 an ounce. There's a lot of physical demand, fairly strong for the auto sector and for the jewelry sector, but there's also supply disruptions in South Africa. And that's kind of a similar theme in copper as well. Ongoing supply concerns, and you can add to that the possibility of tariffs as well.
Exactly. It's a perfect storm, really, for some of these commodities. Coming up in the program, Victoria Fernandez of Crossmark Global Investments with stocks trading near all-time highs. Louise Chen of Scotiabank Out Capital with an outlook on pharma stocks for 2026. And Deborah Weinswig of Coresight Research recapping the holiday shopping season. We begin this hour with stocks aiming to extend the year-end rally. Victoria Fernandez of Crossmark Global Investments writing, we begin the year with equity valuations at somewhat rich levels and lots of optimism already baked into those valuations, setting a high bar for positive surprises and paving the way for moderate returns. Victoria joins us now. Victoria, thank you so much for joining us. If the bar is so high for next year, do you think we are going to see some sort of correction in the markets?
I think we will, Annmarie, and it's typical that you'll see that in a midterm election anyway. So you add in the element of coming into the year at high valuations, and you're setting yourself up for that. I mean, you typically look at a midterm election year, and coming into that year, you've already priced in those pro-growth components, the optimism around things being positive after a new administration comes into term. And as those positive elements actually come to fruition in a midterm election year, you start to see some pullbacks, some intra-year corrections, sometimes up to as much as 15, 16, 17% you can see. So there's a lot of volatility. You usually get higher yields, so we wouldn't be surprised to see yields move a little bit higher as well. Setting this up for a year where you're going to see a lot of churning, but have moderate returns, not like we're going to, like we've seen the last couple of years with these huge returns.
So do you think we're going to see investors want to have more defensive trades? Could we see also rotation in the market?
Yeah, we're already seeing some of that rotation, not necessarily into staples per se, right? Staples are still struggling. So you're not getting that full-on defensive shift. But what you are seeing is people come out of some of those high flyers, those hyperscalers, the high leveraged tech, or not leveraged, but the high valuation tech names that are out there. You're seeing them trim those names back and going into some areas where you're starting to see uptrends in the sector. So whether it's healthcare, whether it's metals like you guys were talking about, we've seen it in financials, we're seeing it in industrials. There's opportunities there to go in. Staples are still dragging. So we haven't seen, like I said, that full rotation to defensive, but I think you're going to want to have a little bit of that in your portfolio if we get a typical midterm year like we normally do.
Let's face it, Victoria, it's going to be pretty quiet until mid-January when corporate earnings come out for the fourth quarter numbers. And given that we had this government shutdown, the longest on record, disrupt the flow of economic data, it feels like there's going to be more importance placed on what companies say, especially how they forecast things for the coming year than what we've been getting from official data. What are you thinking in terms of the big themes you're anticipating from some of those sectors that you mentioned?
Yeah, I think everyone's going to be looking at the CapEx, not just for those AI names, but across the board. That's really a driver, I think, of some of the optimism that we have is this increase in CapEx. Some of that due to the OB3 bill that was passed and the tax advantages associated with that. But we know CapEx helps growth. It gives you increased productivity, increased profitability. So people will be watching for that CapEx component. I think we're also going to be looking at those retail names to see how does that consumer continue to spend? We know there's this divergence and it's going to be focused on the high income consumer. Will they continue to support the economy with their spending? So we'll be paying a lot of attention to that and really what the expectations are for profit margins. Whether you're looking at EPS growth, revenue growth, or profit margins, those numbers are getting really high for 2026 and going into 2027. I think people are going to want to see, can they actually see those numbers come to fruition, or are those going to be pulled back some? So those will all be elements to watch in earnings.
And I'm so glad you highlighted CapEx, because when the AI build out first began, CapEx was something that was seen as almost a positive because it showed a company's commitment to the future. However, increasingly, it's become something of a burden, something that stretches their balance sheet. What's the sentiment towards CapEx? Because if you don't have any ROI to show for immediately, is it going to be seen as a negative?
That's exactly right. You've got to be able to see that there's some kind of return that you're getting on the money that you're investing, especially if it's disrupting your balance sheet. And I think that's the issue people are going to watch. It's very much company specific, because you can look at something like Oracle, where they're having to go to the debt market. Their free cash flow is going to be drawn down significantly. That's a very different story than looking at someone like an Alphabet, where they're still going to have very strong free cash flow. Yes, they can go to the debt market, but that free cash flow number continues to be strong. So there's not as much concern when it comes to a company like that. It'll really be driving down into the balance sheet to see how is the CapEx going to affect cash flow going forward. What does that mean in terms of earnings? What does that mean in terms of dividends? If it's a dividend paying stock, those are all elements that will play into what CapEx looks like for each specific company. But as a whole, we know it's typically supportive of GDP and productivity. So people will be they'll be biased towards positivity as long as the balance sheets can handle it.
Victoria, you mentioned that midterm election years tend to be high growth years. What are you expecting from the administration to make sure they keep that growth continuing?
Yeah, I think we're going to see not just some stimulus coming for the consumer, but we'll see it for corporations as well. So we talked about CapEx, what that looks like. R&D, there's going to be benefits associated with R&D and building infrastructure here in the U.S., so that onshoring benefit. But consumers as well. There's a lot of tax advantages for consumers, not just no tax on tips, but you're looking at interest on car payments. You're looking at changes in regards to SALT taxes, in regards to the child deductions that you get. There's a lot of elements there that I think will be beneficial to the consumer as well, that will lift them up for at least probably the first half of the year. Those are some of the things that I think you'll see coming specifically from the administration. And there's always talk about something new, right? We're hearing talks about checks being given because of the tariffs that have come in and the elements that are positive there. So all sorts of things that I think could boost consumers in the first quarter coming from the administration, and then add on just some of the things you have, like the World Cup coming, 250th birthday party for the nation, all of these things that will generate more activities here in the U.S. and generate more GDP.
I'm certainly looking forward to the World Cup, but when it comes to things like tax refunds, do you think consumers, because they know it's coming, do you think consumers are already out there spending that money right now in the holiday season?
They might be in anticipation of that, so it could be less of a fact. It kind of goes to that point that we're saying where you come into the year with a lot of those growth elements already built in for your optimism for what you think is going to happen in the market. And when it comes to fruition, there's not much of an effect. That could be part of it. They could be spending that now. But it seems like lower income consumers really are holding on right now. You're not seeing savings rates go down tremendously, which is telling us that it's the high income consumer that's really spending. Low-income consumers are not dipping in to those savings just yet. And year over year, holiday spending for that cohort is actually negative. So I think they're holding back a little bit, waiting to see what happens. And a little bit of extra cash coming in next quarter could be a benefit for them.
Well, high-income consumers are spending in part because of the wealth effect. Annmarie has told us several times about how the S&P 500 closed at a record high for a 39th time on Wednesday. If there's a sudden market pullback, if we see those gains unravel, how quickly could we see the wealth effect work in reverse?
Yeah, I think that's actually, something we really need to watch, Scarlett. So you're right. Lower income consumers spend based on what they're making, right? What their salaries are and what the job market looks like. High income consumers do spend based on wealth effects. So as long as the market is doing well, they're going to spend. If we see that pullback, if we see the volatility that we think we'll see in 2026, you should see the high income consumer pull back a little bit. They won't stop spending completely because they still have the job component there. But as they see housing prices maybe start to come back a little bit, as they see the market pull back a little bit, their spending will start to shift slightly. I think that means you have to be a little bit more cautious on those more expensive retail companies that are out there. Those high income retail companies will probably suffer a little bit if that happens. So there'll be a much lower level of spending that will occur.
Victoria, let's just end on the big debate going into next year in financial markets in terms of the Fed's next move. What are you pricing in for 2026?
Yeah, we're really only pricing in one cut for 2026. We think they'll hold in January just because there's still a lot of unknowns going on. We did have a strong GDP number, but they do have a whole month of January to wait. They'll get more inflation numbers. They'll get more job numbers. We'll see what happens. But the debate here, I really think, is where is neutral and how accommodative are we right now? I think that's the underlying battle that's going on at the Fed, and how accommodative do they want to be in order to not stoke kind of the flames of inflation. That'll be the battle we continue to see. We think we're probably closer to neutral than what many people think, which means there'll be fewer rate cuts going forward.
Victoria, thank you so much for your time this morning. Hope you had a lovely Christmas with your family. Victoria Fernandez of Crossmark Global Investments. Let's get you an update on stories we're watching elsewhere this morning. Yahira is back with your Bloomberg Brief. Hey, Yahira.
Hi, Annmarie. Ukrainian President Volodymyr Zelensky saying he plans to meet with President Trump in Florida on Sunday. Speaking to reporters, Zelensky going on to say that a framework for a deal between the U.S. and Ukraine is almost ready. The Kremlin, meanwhile, saying its representatives have contacted the U.S. at President Putin's direction and agreed to continue their dialogue. Meanwhile, the U.S. launched a military airstrike against ISIS targets in Nigeria. President Trump saying he ordered the precision hits at the request of the Nigerian government, which has been struggling to contain increasing levels of terrorist attacks in parts of the country. Defense Secretary Pete Hegseth warning more strikes are coming if the group continues to target innocent civilians. And copper prices are trading at record highs across global exchanges, adding to substantial gains made this year as investors bet on tighter global supplies in 2026. Metals overall have made big gains in December, with copper expected to be a major beneficiary of the world's energy transition, and prices received an additional lift from a slump in the U.S. dollar. That's your Bloomberg Brief. Annmarie.
Yahira, thanks so much. All right, coming up next on the program, Louise Chen will be joining us of Scotia Capital with a bullish outlook on pharma stocks for 2026. That's coming up next. You're watching Bloomberg Surveillance.
We see a huge amount of appreciation across the AI names. There's a question of which ones and how long can that run for. Some of them I'm much more bullish on than others. And so I think that's part of it. And then there's also a question about sort of where's the consumer at? How good is the data right now that we're getting, particularly from the federal government? And so there's a lot of uncertainty. But at the same time, people have been making a lot of money over the last few years and they need to put it somewhere.
That was Sarah Kunst of Clio Capital. Good morning and welcome to Bloomberg Surveillance. I'm Annmarie Hordern alongside Scarlett Fu today. We do have markets relatively unchanged going into the opening bell. It is a shortened holiday week with Christmas and next week as well with New Year's Eve. But you do see stocks continue to trade around that all-time record high. Turning now to Pharma. Louise Chen of Scotia Capital, bullish on the sector entering the new year, writing, "We believe large-cap biopharma stocks multi-year underperformance relative to other sectors, and the major indices create a good entry point ahead of the next wave of innovation." Louise Chen joins us now. Louise, thank you so much for joining us. When you look at potentially this space in 2026, what exactly do you like?
Yeah, so when I look into 2026, we cover about 15 or so of these large cap pharma stocks. I really like, there's two stocks that I like. I like J&J because I think that the underlying performance is really strong and that's going to become more evident as the company continues to execute. And then I also like some of these trough PE multiple kind of stocks. There's about 3 of them in our coverage universe. That would be Merck, Teva, and also Bristol Myers. And of those two, I like Merck and Pfizer the best of those companies. And the reason that I like them is because I feel that their pipelines are underappreciated. They've got a good plan, and I think they're going to beat expectations in 2026.
When you look at this space, though, 2 names you have not mentioned. One, Eli Lilly, and they are potentially going to be on the heels of what we just saw from Novo Nordisk with Wegovy and creating this injections for weight loss, diabetes, to now be taken as a pill. Is that going to be really changing the landscape for next year?
Oh, I think it's going to really change the landscape. I do like Lilly. We have a sector outperform on Lilly, but I don't need to tell you what everybody already knows, that Lilly's a great stock and they're going to continue to outperform expectations. The oral pill is going to be huge. And the reason it's going to be huge is it's really going to increase in access and affordability for patients. Right now, the injectable is more expensive. It's harder to take. It's got a greater side effect profile. So people that are not looking to maximize their weight loss, and that's a large percentage of the population, this will be really big. There are about 1 billion people globally that are obese, overweight, and the penetration rate of these obesity drugs is in the single digits. So with the oral pill, I expect that to change into the double digits.
I know you said that you don't need to tell us about Eli Lilly, but people like proven winners, and Lilly has been a proven winner. It's up 41% so far this quarter, and pharmaceuticals as a group are the best performing group in the S&P 500 this quarter, up 18.5% compared with the S&P up 3.6%. Do you see all the good news already priced into Lilly? Like when it does get its actual pill form of its obesity drug approved and ready for sale, that we're not going to see much of a reaction at the end of the day?
Oh, I think you'll see a reaction. And the reason that you will is because the obesity market is so big. I think the end market projection has gone to about 100 billion to 200 billion. And a big unknown is what it will look like in the markets outside of the U.S. And so far, it looks like people are getting that pricing outside the U.S. and it's direct to consumer. It's not really reimbursed by a lot of the government agencies outside the U.S. So I think it's going to be really big. I think the numbers will continue to go higher for Lilly. And don't forget, Lilly has a whole pipeline behind their first 2 initial drugs to come to market. The oral should come to market early in or mid to 2026. And those will be even better drugs than what the first generation of drugs looks like. So I expect this to continue to run.
Of course, when we look at the sector as a whole, there are a lot of risks that are tied as well to policy. We know that the Obamacare premiums are high and they're going to stay high unless the Republican Party can come to some kind of health insurance solution, which increasingly looks more and more unlikely. How are you thinking through whether the political problems start to show up in investors' enthusiasm for this sector?
Yeah, I think that's already more than priced into these stocks, right? So when you saw that the Trump administration was coming in to the U.S. government, a lot of the pharmaceutical stocks in that whole sector already took a dive. And now you're seeing things being traded on fundamentals versus fear, and I expect that to continue. So with some of these MFN deals, with a CMS IRA and what have you. A lot of these drugs will be coming direct to consumer at a huge discount. So that's going to be one segment of the market that people haven't factored into yet. So net, I think things could be pretty equal for these large cap pharma companies.
Well, just 7 days ago, the president, though, announced, he says, largest developments to date in bringing the most favored nation pricing to American patients. When you look at some of these names that are tied to this, Bristol Myers, you have things like Merck, Novartis, Sanofi. What do you see the timeline for this to actually take place?
Yeah, so each individual timeline is going to be a little bit different, right? So you saw 14 of the 17 companies that the letter was sent to actually already come up with these MFN deals. I think and also the drugs are also individual as well. So I think you'll start to see an impact next year, and then that will roll through, and it is going to come through Medicare. It's not for all their broader markets. So the impact is actually limited to certain drugs in certain segments of the market.
Do you think companies are going to use the excuse or try to counter this, that now this means that they cannot continue to do high-end research for new medicines?
No, I don't think so at all. I think what we've seen is that innovation actually continued. There's a lot of headlines and things in the news, but what I think the street and investors have found surprising is that it's actually been business as usual, especially for the large cap pharma companies. So I expect that positive momentum to continue. And then when you look at some of our companies, they have worked through 24 plus administrations. So I think their ability to navigate through all these sort of big macro changes is already there, and they know how to do it.
Louise, one thing that you point out when you look at the overall biopharmaceutical sector is that you see a good entry point ahead of the next wave of innovation where companies will be treating to cure. What does that mean, treating to cure?
Okay, so treating to cure is either an actual cure or a functional cure. And I think right now we're looking at more functional cures depending on the actual disease. And that's a huge deal because people always talk about this longevity trait. And for people to live well beyond 100, you actually have to cure the disease. It's like a car. Over 100,000 miles, it's going to start to break down, right? And that's what we're starting to see is the next wave of innovation that's coming. And I think that's super exciting because that means people are going to actually live a lot longer.
And you mentioned J&J as one of the main beneficiaries. Who else fits into that category?
Okay. Yeah, I think a lot of our companies are looking at that, right? So I think out of our coverage universe, most of these companies, their target really is to treat to cure, to stop the disease, right? There's a company, Vertex. I think it's super interesting. They're coming up with a product, povetacicept, right? It's for IgA nephropathy. And that product will actually keep people from getting kidney dialysis. And that's really interesting. So that's just one example, but there's a lot of examples of that in our coverage.
When it comes to treating to cure, and you think about this, how has AI been potentially helpful to these pharmaceutical companies?
Yeah, I think AI is part of the equation, right? So I think in the actual operations of the company, it's actually been very important. As it comes to drug development, still think we're in the early stages, and we're yet to see what that can actually happen. But for a long time, these companies have been using AI to help with the drug development process to make it more efficient, to basically take out some of the inefficiencies of the systems in terms of testing too many molecules, spending too much money behind it. But I think that will actually continue to ramp up through the years, and we'll see the result of that over time.
Maybe we can get to treat to cure pharmaceuticals quicker with AI. Louise, thank you so much for joining us this morning. Louise Chen of Scotia Capital. Coming up in the program, Citi Chairwoman and CEO Jane Fraser caught up with Bloomberg to discuss the bank's growing exposure in China. That's coming up next. Plus, you hire with your morning movers, Nvidia rising after closing another deal. You're watching Bloomberg Surveillance. Good morning. Welcome to Bloomberg Surveillance. Hopefully you had a lovely Christmas. I'm Annmarie Hordern alongside Scarlett Fu this morning. She's joining me as Jonathan is still on paternity leave and Lisa is off, but the gang will be back together in 2026. Right now, equity markets are unchanged. In the middle of the Santa Claus rally, we are really having low volumes and very thin trading today on this day after Christmas. It is a federal holiday. The president came out and he made, I believe, the 24th as well and the 26th, as they do in the United Kingdom and other places I've lived. We have these bank holidays, federal holidays, but the NYSE and NASDAQ exchanges said, nope, we're still open for business. There will be trading. All the action has been in the commodity space. this entire week and this morning. Scarlett, you've been going through some of these numbers, and they've been almost extraordinary, and what people are also expecting to go into next year.
Absolutely. Gold is up 70% this year, the best annual performance since 1979. Silver up about 150% this year, the best annual performance since 1979. Platinum year-to-date gaining 162%. I mean, the numbers just speak for themselves. And all of this is against a backdrop in which the U.S. dollar is weak and will probably continue to weaken. So there is that knee-jerk reaction of weak dollar, stronger commodities.
Absolutely. All right, we're 1 hour away from the cash open. Here's your morning movers with Yahira. Hey, Yahira.
Hi, Annmarie. We start with Nvidia outperforming the Mag 7 this morning, with shares up nearly 0.8%. And on this quiet week, Nvidia did manage to make some news. Just before Christmas, it said that it struck a licensing deal with the AI chip startup Grok, taking with it some of its top engineers and even its CEO. Analysts are generally upbeat about the deal, since it means Nvidia can incorporate these new advanced chip designs into its products and stay ahead at a time when you're seeing Amazon, Microsoft, and Alphabet developing their own in-house chips, though, as we know, Nvidia is way out ahead. Meanwhile, sticking on chips, we go to Micron. Those shares are up 2%. And if we maintain these levels, Micron will open at a record high. And it's worth noting the run this stock has had this year, up 230%, as demand for its memory chips continues to be strong due to its place in the AI market. And we end on Biohaven. That stock is absolutely plunging this morning, down 12% in the pre-market after one of its experimental drugs to treat depression failed to meet goals in a mid-stage study. Analysts are disappointed, but not surprised given the complexity of these clinical trials when it comes to depression. Though on a day of thin trading, we are seeing this outsized reaction. Annmarie?
Thanks so much, Yahira. And I was just going through some of the pop culture things to know about 1979, when gold and silver were rising in the same way this year. Do you know what one of the top songs was? It's almost one of the top songs now, at least if you follow President Trump. The YMCA by the Village People.
Of course, yes. So everything comes full circle.
Absolutely. Everything comes full circle. It's almost like it's 1979. All right, we're going to turn to banking now. Citi CEO Jane Fraser spoke exclusively with Bloomberg's Stephen Engel about the bank's growing exposure in China and Citi's U.S. outlook heading into next year.
The recent truce has brought some much needed and welcome stability here. We're in a position now for both sides that wanted to have a period now where we can move ahead and have a more stable relationship between both of them. It's transactional, but it's in both sides' interests. And we see our client base navigating this well.
Yeah. What's your vision for the China market as it folds into your overall restructuring plan as well? You're now chair and CEO. First time that those two roles have been joined in a couple of decades. Clear mandate to carry out your vision going forward. What does that look like when you did exit your consumer banking business here, like you did in many markets around the world? You also sold your retail wealth management portfolio to HSBC. You got out of an investment bank JV with Orient Securities, I believe, and you have an outstanding license application for your wholly owned JV in securities.
So Citi has been in China for 124 years. We have a landmark building here in Shanghai. And what we have done is focus our strategy and grow. We are following our international clients around the world. We're seeing them with renewed interest and focus in China, as we talked about. And then we're seeing the Chinese companies innovating at pace and also looking at expanding internationally. So we've been growing rapidly here with a more focused strategy.
This also very bullish on India. Magnificent opportunity there.
He's biased.
Might be a little bit biased, maybe. But again, what do you hope to get from those markets as it fits into your restructuring plan and the vision that you just talked about?
No, the growth plans that we have going forward, because we are on the front foot. I cannot stress that enough. And you can see it in our results. So all of our businesses, we're taking share, we're growing very quickly, and our returns are improving. So as we're looking forward, it's growth. Let's take India. Citi is larger in India today. We are the largest foreign firm by revenues in India. When I look at Korea, where I was just at, that's another market where we were the first foreign bank to open the doors in Korea. And we have a very strong position there supporting multinationals and clients. So as I look around the world, it's becoming more focused on diversification. There is also a focus on reinvention. What we are doing is helping provide the strategic advice. We're helping provide the financing and structuring and arranging that. And we're also helping manage the supply chain reconfiguration. We're helping with the hedging in foreign exchange, interest rates, because volatility is a feature. It's not a bug of this system.
Through your restructuring, you had to get rid of the retail side. And are there other areas that you would like to divest? I know
you have the wrong story. Citi is about growing. We're very clear.
Front foot forward.
We are very clear on our strategy, and we're moving onwards.
I only ask because, again, the Russia situation is a little bit different probably than your overall strategy. We just got word that Vladimir Putin approved the sale to Renaissance Capital of your bank in Russia. Probably something that you've been wanting to do for a while, but it was held back.
We have been winding down, as many companies have been, the franchise in Russia. We were waiting for the final approval to be able to sell. We've got a couple more to go to Renaissance, but it's a tiny business. So it's in the grand scheme of where Citi is, where we're investing, and what we're doing. It would be good to get that done, but it's not critical to the firm's strategy going forward.
Let's talk about the outlook in the United States right now as we head into 2026. We saw the market reaction overnight. Simply, we're seeing that the Fed's equation, the bets for possible easing coming up, are now 50-50 or is tilt below that because of the specter of inflation. What is your outlook for Fed action going into the new year and the specter of inflation rising?
Look, I don't think we're out of the woods yet, and there's a sense that there may be another shoe to drop. It could be in tariffs or in the labor market, it could be in the asset prices that are quite high in the States. But all of that said, we're quite optimistic about 26. The challenge for the Fed right now is with the government shutdown. We all have a dearth of up-to-date data, which we could do with. It's hard to make these calls of exactly what's going on whilst we're waiting for the information. But as we look further out into next year, I think the resiliency of the corporate balance sheets, the strength, companies leaning in to innovation, investing in AI, there is, I think the doomsdayers will be proven wrong.
We're a couple months out now from when we had concerns rise about, I think there was one of Tricolor, the subprime auto lender. There were failures. There was concerns about non-performing loans. What does your balance sheet look like as far as that, and where is your worries lie?
Our balance sheet is pristine, but I think part of that is because it's very heavily investment grade on the corporate side. We're over 80% investment grade globally, and when we look at the consumer side, it's about 86% prime. So we tend to see the most resilient, healthiest parts of the economy on the balance sheet. All of that said, we haven't seen a thing that is concerning us. The consumer in the States is being fiscally responsible. Companies have been building up some more cash, either for a rainy day if it proves necessary, but most of them for investment. And they're acting from a position of strength. We'll keep an eye on the labor market. We'll keep an eye on some of the areas of mid-tier players in private credit and the like. But as far as we're concerned, that second, third order effects, the bank's not seeing anything that we're worried about.
Are you concerned by what some say maybe bubble forming in AI? We talked about the advantages of AI, but how much of a bubble or overheating?
I'm not sure if we're just in with a lot of our tech clients on the West Coast. I don't think anyone was ready to say that it's a full-on AI bubble, but no one is saying that there aren't some real pockets of let's call it the British understatement frothiness in the market. It's more around the edges. What I found interesting is we can see a lot of the demand for the infrastructure build that's going in AI and the energy for the next couple of years. You know, where you saw some opinions diverge was in the 3 to 5 year period, could we be in danger of overbuilding? But no one's feeling that for the big investments that are going on at the moment for the next couple of years. So I think on that one, certainly some pockets of frothiness there on the valuations, but the core infrastructure investments are important. And as we're seeing in our own bank, and I think many companies are, we'll start getting some of the productivity benefits coming through. But the scale and the pace of investment is unprecedented, that is for sure.
Great conversation with Stephen Engel and Citi CEO Jane Fraser. Let's get you an update on stories we're watching elsewhere this morning. Yahaira with our Bloomberg Brief. Hey, Yahaira.
Hi, Annmarie. Ukrainian President Volodymyr Zelensky saying he plans to meet with President Trump in Florida on Sunday. Speaking to reporters, Zelensky going on to say that a framework for a deal between the U.S. and Ukraine is almost ready. The Kremlin, meanwhile, saying its representatives have contacted the U.S. at President Putin's direction and agreed to continue their dialogue. Meanwhile, former Malaysian Prime Minister Najib Razak has been found guilty of abuse of power and money laundering in connection to a multi-billion-dollar fraud case. Najib, already in jail due to other convictions, now faces another 15 years in prison and a fine of over $2.8 billion. The ruling judge dismissed numerous aspects of Najib's defense and questioned his credibility. And coastal communities in Southern California are bracing for more rain and flash floods, with a state of emergency still in place for Los Angeles and neighboring counties. Meanwhile, here in New York City, heavy snow is on the way. The winter storm has already caused hundreds of flight cancellations in the midst of holiday travel. That's your Bloomberg Brief, Annmarie.
Thanks so much, Yahaira. Up next, setting up for the day ahead, plus Deborah Weinswig of Coresight Research, recapping the holiday shopping season. And we'll get another check what Yahaira was just talking about, the storms taking shape across the nation this holiday weekend from AccuWeather. That's coming up next. You're watching Bloomberg Surveillance. Good morning and welcome to Bloomberg Surveillance. I'm Annmarie Hordern alongside Scarlett Fu. This morning, we're counting you down to the opening bell. Here's your trading diary for the week ahead. Zelensky is expected to meet with President Trump as soon as Sunday in Florida. Tuesday, we have ADP employment data plus FOMC meeting minutes. And on the last day of 2025, we'll get jobless claims. Thursday, the markets will be closed for New Year's Day, and then it's off to the races for 2026. Turning to the consumer, Deborah Weinswig of Coresight Research saying, quote, holiday demand is holding up, but it's a value-first consumer. Deborah joins us now for more. Deborah, thank you so much for joining us. Hopefully this gives some insight into what the holiday shopping season looked like. When you say value first, what does that mean? Where are people going to shop?
That's a great question, and thank you for having me on. So we definitely saw continued strength in off-price. So that's TJ Maxx, Ross Stores, Burlington. We also started to see pockets of strength in the dollar stores, and Walmart, of course, continues to really hit on all cylinders and is continuing to take market share really across the board.
Deborah, Walmart, Amazon, and off-price retailers like the TJXs of the world are winning this holiday season because consumers are seeking value. So these retailers are getting the volume, but are they giving up any margin along the way?
That's a great question. What we're seeing is that the specialty retailers actually have done an amazing job of more dynamic pricing and utilizing a lot of AI to do a better job of matching price to consumers. So we think that in the specialty retailers, they're doing a great job on maintaining margin. When it comes to, let's say, some of the other pockets of retail, I think that's been a bit more challenging. And so a bit more of this kind of bifurcation where you've got kind of some of these stronger players, and I would say some of these weaker players where either they don't have the technology, they don't have the product, or they don't have the price set at the right level for the consumer.
So how does Target fit into that? Because it should be a retailer that benefits from consumers seeking value. Yet the company really is struggling. It has a new CEO, but has a lot of familiar problems, falling same-store sales, reduced forecasts. What does it take for the company to work through its problems and be in a position to capitalize on this shift to value?
I mean, I think that's it's not even $1 million question. That's a $10 million question. They have, first of all, you replaced the outgoing CEO, Brian Cornell, with someone internally. You didn't set up kind of a co-CEO kind of structure. So you don't have kind of like the old and the new. So I think there is nothing that's kind of like in place right now to help them with their ills. They've got issues with regards, inventory, kind of their out of stock levels are as high as they've ever been. Their ability to execute. There's just something on the execution level that's more fundamental. And I think supply chain, which they've supposedly been investing in for the last decade, but they're just not putting their money into the right place. They've significantly slowed down new store growth. They were using their stores as warehouses. And I think they keep going back and forth between all of these strategies. Whereas you look at Walmart, right, they've stayed, and it's not that their execution has been perfect, but they've continued on one path. And I think that's what's gotten them to where they are today.
Deborah, how concerned have you seen consumers with tariffs coming out of the Trump administration?
So I think that's a really important point. So I think that what we saw is that holiday sales were pulled really early, right? Because the consumer was worried about higher prices. Then you had this, almost like everything just went quiet with a shutdown. And then we saw this huge burst at the end with things really strong. And we were mapping store traffic. We saw some of the highest traffic we've ever seen on record in specialty retail. It was up about 6.2%, and we estimate sales in specialty up about 4.8%. Numbers we haven't seen in quite some time. So while it was definitely dynamic and probably stressful along the way, I think that the sales ended up much more positive than most people expected, even at the beginning of the season, certainly stronger than what we thought.
Well, what do you expect for 2026? Because there's a lot of tariff question marks hanging over the consumer and the market's head, whether or not the Supreme Court is going to strike down IEEPA, whether or not we might see more tariffs in certain places like copper, which might impact supply chains, or even the U.S. renegotiating USMCA from Trump's first term.
So it's a great question. And if you go back to what's driving a lot of apparel demand right now, it is actually GLP-1. So about 1 in 5 Americans have been on GLP-1. Of those, about 72% have changed the size or more. And of those 1 in 5, about 52%
Wait, hold on. Are you saying
the
people are shopping more right now because so many people have lost weight because of Wegovy and Ozempic?
Yeah. So, and it's not just apparel, right? They're changing shoe size, they're changing jewelry size. So it's literally apparel, footwear, and accessories across the board is driving a significant amount of growth. And what we're seeing, right, you just saw this whole kind of DXL transaction, right? Because of the change in sizes, right, even those retailers who are winning is changing.
Interesting. That's okay. I love that. One thing we know from the holiday shopping season is that gift cards are a very popular gift. And I bring this up only because the revenue is often recognized or usually recognized when people actually redeem the gift cards. Have you seen more of a shift or less of a shift from physical gifts to gift cards when you have an environment where prices are elevated and consumers are frankly worried?
The gift card question is an interesting one because what we're seeing is that more and more retailers are trying to create community.
Deborah, I'm so sorry. I believe we're losing you here now. Thank you so much for that insight in the holiday shopping season. Deborah Weinswing of Coresight Research. Scarlett, what struck me is that I didn't even think about that. More and more people are on these injections. Matt Miller are on them. He told me about them. Maybe he's one of these people that are going out buying new clothes. And I wonder how much more that's going to be a story next year, given the fact that it's now going to come in pill
Absolutely,
form.
right, because it just broadens out the potential customer base for these treatments. Plus, once you buy a new size, if you continue taking the drug, then you're going to need to get another size down the road, too. So this is kind of a recurring expense.
I've never heard of your shoe size changing, though, if you lose weight.
Well, when you have a kid, your shoe size often changes. My feet got bigger after I had my 2 kids.
All right. You learn something new every day. All right, turning to weather now. You want to listen to this if you're traveling today. Heavy snow expected to begin in the New York City area later today. The winter storm already canceling hundreds of flights in the middle of holiday travel. AccuWeather's Bill Waddell back with us now. Bill, what do we need to know? Whereas you said the last hour, are we still expecting maybe up to 12 inches of snow?
Yeah, that's right. In parts of the Northeast, that is possible. If you're trying to do any of that holiday shopping, use those gift cards, do the exchanges, or if you have flexible holiday travel, do it this morning or early this afternoon, because those big impacts are going to be reaching the New York City area by about 4 or 5 o'clock this afternoon. This is the start of the winter storm. You could already see that we have some snow, wintry mix on the radar in part of the Great Lakes Northeast. Looking at the big picture, all of the ice is going to be in the wintry mix on the southern side of this storm, mostly snow on the northern side. Let's get right to New York City with the AccuWeather Wintercast. Our expert meteorologist predicting 3 to 6 inches of snow in New York City. But if that cold air hangs on, there is the potential we could see more than 6 inches of snow in parts of New York City. And it's not just the snow. There could be some other big problems with this storm. Check out the wintry mix, the ice component of this, where you see that dark pink on the map. Parts of Michigan, western and central Pennsylvania, even parts of Maryland and West Virginia. We could see sleet, freezing rain, ice pellets. The big concern here, especially where we see that darker pink, is potential ice accumulation on the tree limbs and the power lines. If those start to weigh down, we hear the tree branches snapping, that could lead to some power outages and some big problems. So looking at the big picture when it comes to holiday travel, this part for the eastern half of the country, that's mostly for the afternoon, evening hours, but you could see major holiday travel weather impacts expected from the Great Lakes to the Northeast, and still our friends on the West Coast dealing with all the impacts of the rain, flooding, and mountain snow as well today.
Bill, thank you so much for that update. Bill Waddell of AccuWeather. Everyone's really focused on this, of course, because it's the middle of holiday travel. Potentially you're going away for New Year's. And also, if it's 12 inches of snow in some places, it's going to be kind of hard to get around.
Absolutely. And I wonder as well, if temperatures stay really low after the snowstorm, that means that you've got a lot of ice on the ground. You've got a lot of difficulty with actually moving the stuff out. You know, everyone's got a shovel, but you can't do it if it's weighed down by ice and water.
And it's ice. Yeah, that's what worries me. It's icing. But you go ice skating. You play ice hockey, so maybe you can do a game outside.
You know, that takes a lot of work to clear the outdoor rinks.
That would be fun, though. All right, Scarlett, thank you so much for spending the week with me.
It's been a pleasure.
It's been a fun Christmas with you around the table. Coming up on Monday, Lisa will be back with you. Lori Calvasina of RBC will be joining her. Krishna Gua of Evercore ISI and Lisa Shallett of Morgan Stanley Wealth Management. This was my last show on surveillance, hopefully, for the year. I don't get pulled into something next week. John is still on paternity leave. Lisa will take you through next week, and then we'll all be back together for 2026. I hope you and your family have a very Merry Christmas and Happy Holiday season. This was Bloomberg Surveillance.